Hello to all of you and welcome, welcome, welcome. Wow, what a video. So where are you all coming from today? I was astounded by the quality of that video, and I'll tell you why. Actually, no, I'm going to let you in on a little secret just now. So let me rock and roll into our presentation here. And I need to get my PowerPoint up for you. Okay. So Shane, if you can just let me know, are we good to go? Can everyone see and hear me?
Yep, we're all good to go. I can see your screen, can hear you loud and clear.
Excellent. Thanks, Shane. Okay, so let's get into day 4. So what is day 4 all about? Day 4 is all about risk management. It is about mitigating risk. It is about mastering investing diversification. And what's so interesting with regards to this section, most people don't understand it. Most people don't understand how to manage risk, and they do not understand what it takes to mitigate risk. And the number one way to solve risk is through partners. So we're literally going to go through that today. I'm going to, just before we go back to the tips of success, if you take the last couple of days, hopefully you're starting to see how this mountain or pyramid is being scaled. Because we started in day 1 with what is diversification and why is it the single most important thing to financial success. Then we went to day 2. What are the different asset classes? How do they all operate? And what are the different risks associated with the different asset classes? Then we went to day 3 with asset allocation and how do you build a portfolio and basically have portfolio construction and how that equals 85% of your entire return at the age of 65. But all 3 of those days are about the information. But if you actually want to execute, now you have to have the partners to invest with. You actually have to take action now. And so the question is, how do you manage that risk? And how do you find the right partners in terms of that process? So that's where we go in terms of day 4. Now, again, I've shown you the slide lots of times. And I think what's quite important here is that I would highly recommend that you stay focused. Your future self is going to literally thank you 10 years from now. Pay full attention, take notes, teach other people, play full on, do the exercises, commit to action, focus on your goals, take action and have fun. Now, I told you I'd let you in on a little secret. So firstly, as usual, I want to take my jacket off. It's a very warm day here in Africa. If you think that you've got some complexity or some challenges or some things that are holding you back from getting your goals, I want to let you in on a little secret today. So I basically, at about an hour and a half ago, 90 minutes ago, my internet went down, my fiber. I've got fast fiber into my house. Don't worry, I got backup battery and all that sort of stuff as well. My fiber went down. So I got hold of the fiber operator and I said, what's going on? And they said, no, it's not just your house. It's the entire connection into the whole of the town you live in. I was like, wonderful. So I needed to improvise pretty quickly. So I've got in a car, I've driven somewhere else, and I'm literally presenting at their spot because they're on a different fiber connection. And I've got a funny picture here, which I'll share with you on the WhatsApp group, where I've improvised and I've taken their bread bin, I've turned their bread bin into a stage. So that's the reason for the screen behind me, because I'm not actually in my usual studio with all the usual lighting. But just to add a little bit more complexity, there's load shedding. And so they don't have lights either until the power comes back on. So that's basically what I've been dealing with in the last 90 minutes. Why do I tell you that? I'm a firm believer that in life, ultimately, you get to decide how you're going to behave. You can panic, you can blame the world, you can focus on the problems or the drama, or you can purely focus on the outcome. And our outcome is to give you an amazing experience. Our outcome is to give you that belief, remember, that this is possible. And our outcome is to give you results. Now, with that mindset, that changes everything, because now you don't focus on the problems, you don't focus on the dramas, you don't focus on the excuses, you just focus on getting the results. And so I just wanted to share that little story with you, because whatever your reasons are, whatever your excuses are, whatever's holding you back, just know that I too, and every other person on this planet has complexity, has the world, dancing around and, giving you a few challenges. And it's how you behave. It's how you deal with it in your head. So I just wanted to start with that because I thought I'd let you know that it doesn't always go according to plan and everything, in terms of what you want. Okay, so let's rock and roll then with that basis. So let's go to the resource guide. And I look forward to actually sharing the little picture of me presenting because you're going to laugh. These bread bins actually make, they improvise pretty well. So let's go to the resource guide. I'm going to be sharing with you the links here. So this is it is. So reminding you of the resource guide. And, yesterday was day 3. So you literally go into day 3. You can watch the video all about it. So again, this is just the synopsis of the day. And then this is the full recording. You've got your action steps. You've got Wealth Going Global, the mastermind, the investor strategy sheet, the groups, the diversified investor strategy sheet, the VIP experience. The resources sheet's getting a bit long now. But obviously you got day 1, day 2, and day 3. So again, big shout out to Shane in terms of you walking away. And please just make sure you pin that sheet because, my understanding, Shane, and tell me if I'm getting anything wrong, but the idea is to leave that with you forever. So you'll be able to go in and those resources will be available to you forever, except for the recordings. So again, my understanding of the recordings is that we take them down after a week. The reason being is that when I know from my experience, if I just leave the recordings, I promise myself I'll watch them on YouTube one day and I never ever do. So that's why we basically say to people, right, you've got until the weekend to watch them. If you haven't done it already, I highly recommend joining the WhatsApp group. Again, all the links are in the resources page and the Facebook group in terms of the competition. So the prize, the winner for the homework is Hester. So Hester, full graph. Well done to you. Really appreciate the energy and effort you put into your homework. It's fantastic. You will be joining us in the VIP session later this evening. Plus, you'll get access to all the previous VIPs. Plus, Hester is going to get access to the recordings. So the VIPs get access to the recordings from this, the day sessions, and they get the VIP sessions all in the recording, and they get that for life. So they can watch it as many times as they want. Just to remind you that there are prizes every day for takeaways. So people that engage and ask questions and interact and everything in between. So the hashtag is diversification. And yeah, congratulations to Hester. People are saying. And if you still want to sign up, it is getting to day 4. We're into the second half of this journey now, but there's still, value if you want to engage in the chat, come and ask questions. It's not too late to come backstage and ask questions with me. I know a bunch of people joined just yesterday, and I'm sure that they would, say they got a lot of value. Plus they get the replays forever. Plus they get access to module 1 of Wealth Going Global, which is how to choose the top 5 countries. So again, you saw this yesterday, but there's plenty of people that are talking. I say this over and over again, but I'm just going to say it one last time. I'll probably say it again tomorrow, to be fair. I love the VIP sessions. They're my best sessions. I always say any monkey can do a PowerPoint. The difference with the VIP is that really shows people substance. And the reason being is that we don't come prepared. There's nothing actually prepared. We just answer whatever questions people have. I love how in depth they go, and they go all over the place, and we get asked questions about each and everything. And that's what I love, because it really allows me to dance, which I enjoy, and show our substance of what we learned over the last 28 years in terms of that process. So let's recap. Remember, repetition is the mother of skill. This is all about passive income. So how do you build globally diversified passive income? It's about diversifying across countries, currencies, assets, partners, and time. Now, remember, if you've got a hairy, audacious goal, like globally diversified passive income, you need to break that down into sub-goals and finally into tasks and activities. So just to remind you of your activities from yesterday. So the first one was to research and identify at least 3 different investment strategies: passive investing, active investing, and value investing. The second was to create a hypothetical diversified investment portfolio with the different asset classes and allocate the percentages to the various classes. And again, remember that pie chart that we had with the 579,000 wealthiest people. I'm not saying you should copy it. We had a great question in the VIP, and they said, should we just copy it? And my logic is, again, if you want to be successful, copy successful people. If you want to be wealthy, copy wealthy people. I'm not saying copy it completely, But what I do think is so valuable is analyze your own one and then look at what the wealthiest people are doing and say, well, are they the same? And the chances are that they're vastly different. As an example, the wealthiest people only have 26% in the stock market, whereas the average person through their pension plans and whatever has over 70%. And it just shows you the vast imbalance of what they're doing and what the rest of us are being told to do. Consider the mastermind. Again, I'm going to talk more about that today. If you haven't made up your mind that this is, something for you, for the right type of person, this is literally the best thing that I personally and the team have created in the 20 plus years I've been doing this, to help people get results in terms of that process. And then finally, share the takeaway. I can't overemphasize the value in when you share with others, you're not only adding value to them, but you actually are adding more value to yourself. It's actually very selfish, and you're adding value to yourself, and you are cementing, you are literally entrenching what those core things are that you're learning. And that's the most valuable thing that you can do for yourself. The goal is research the different asset classes and their historical performance, and research and compare the different investment vehicles. So I want to just recap quickly for you the home study course, which we call Wealth Going Global. Again, a bunch of people have reached out to us and said, what's this all about? And, I don't want to spend too much time and kind of, go through this. But, this really was when we built the mastermind, we realized that they needed substance. To build a tall building, you got to have substance. So we said, well, what do they need? And we said, well, we need to basically get clear on their 5 whys. We need to get clear on the top 5 countries they want to invest in. We need to get clear on the top 5 currencies they're going to invest in. We need to get clear on the top 15 assets they're going to invest in. We need to get clear on how to find the right partners and avoid 80% of the mistakes that everyone else makes. We need to get clear on the time and ultimately putting together a wealth plan. And finally, we need to help with technology and how we can bring it all together. So what's really, really important when you go through this, and again, I've shown you this before, so I'm not going to waste too much of your time with this, but it's literally an automated home study course where you can sit at the comfort of your couch and you can go through it in your own time, and you can literally go through all the different modules. You do your homework at each stage of the module, and when you finish, you literally go and download your wealth plan, and you literally have your own personalized wealth plan. Here's mine, my whys, my how, and my what. Just imagine how powerful it would be for you if you had your wealth plan. You knew why you wanted it, how you're going to do it, what you have to do. You've got your investment strategy report. You know what countries you're going to invest in, what currencies, and what assets. Can you just imagine the power of clarity and how that could change you from where you are today to where you want to be in the next 5, 10 years, or whatever it is that we're taking. Back to the value, again, others have paid $30 for the book, $5,000 for buyer's trips, $250,000 for due diligence, $5,000 for the mastermind. If you put this all together, it's literally over $7,000, or nearly $7,000 worth of value. We're not charging $7,000. We're not even charging $997, which is what we should be charging. In fact, most people in this industry are either charging $997 or $1,997 for a home study course of this much substance. But we're not even charging that. We're not charging the current rate, which is $497. We're literally charging $297. So that's the discount. And we offer that purely to people that have done the challenge. Look, you've made a commitment to yourself. You're here. You've made it to day 4. The dabblers are gone. The stressors are now beyond stressed because they're still stressing their way to figure out what to do next. Hopefully the masters, who understand that it's about modeling and partnership now are still here. And we just want to make it easy and kind of a no-brainer for you in terms of that process. We'll also chuck in the Clem Center, the Q&A sessions, the community discussion group, the wealth hackers, the cheat sheets, the calculators, and VIP entrance to the next event. So if you put that all together, it's literally over $8,000 in terms of the overall process. Again, we haven't had a person in the last year ask for their money back, which is why we're so confident. We've had some incredible people go through it, highly, highly sophisticated people, and others that are not so sophisticated. We've had teachers, we've had plumbers, we've had farmers go through it, doctors. So it's not only about sophistication and whether you are or aren't an accountant and understand numbers, because one of my skills is to dumb down and to make simple the much more complicated concepts. And that's why we give the money back guarantee, because we know it's good and we know it works for people. So if you want to build globally diversified passive income with at least $5,000 a month, possibly $10,000, even $25,000 a month, simply and safely. If you want to diversify your investments between countries, currencies, and assets, if you want to use your limited time to get effective results in a predictable way, if you want to save decades of frustration and millions of dollars to get the right knowledge for you and your family, if you want wealth protection, a plan B, and peace of mind, if you want to create generational wealth for your family, if you want a fully completed, executed wealth plan and investor strategy sheet, and if you want to get results, this is the simplest and most affordable way for you to literally get started in terms of that process. Okay, so just a reminder, it's not $8,000, it's literally $297. You've got the money back guarantee, so it's literally a no-brainer in terms of the process. And so you go to wealthgoingglobal.com/join and use the promo code DC50. So basically Diversification Challenge 5.0. And by the way, the promotion runs out on Tuesday. So from my experience, people that take action get results. We like to work with people that take action and get results. It gets rid of all the dabblers, the blamers, and the complainers. And so it closes on Tuesday. So you've got whenever, even if you're watching the recording, it's 4 or 5 days from now, roughly. And if you don't want to take my word for it, then take all the other people who have done its word for it, from all different sectors, from all over the world. You can go and read all about it on Trustpilot. You can go read about it on wealthgoingglobal.com/join, and you can watch the videos of what other people have to say. Okay, so it's time to get into day 4. Again, I'm not giving you financial advice. I'm literally teaching you my knowledge, my skills, and going to teach you about the mistakes that I've made over the years and how we can avoid them. Now, it's funny because when we come to partners, it's probably the most mistakes I've made more than anyone in this sector, because choosing the right partners is extremely hard, particularly when you're doing it in different countries, in different asset classes, in different cities. It's one thing to get it right in one country, in one city, but try going to multiple countries, multiple cities, multiple asset classes. So it's taking a lot of time to evolve and adapt the way we do this to find the right partners. And I want to share that with you, but I'm not taking accountability for your investment decisions. I'm educating you. I'm giving you knowledge. Hopefully I'm giving you belief. Ultimately, you're going to be accountable to make your decisions. So what is day 4 all about? Well, it's a deep dive into risk management strategies, how diversification plays a crucial role in mitigating investment risk. It's another essential step in the journey to becoming more confident and informed investor. It's about managing investment risk. It's about understanding investment risk. It's how diversification reduces risk. And ultimately, it's about exploring risk management techniques. So I'd like to see in the chat box, because, as I said to you, I've had a little bit of a wobble, if you want to call it that, in terms of both internet and electricity. But how are you all doing? Are you ready? Are you excited? Do you want to go into this? Do you want to learn about partners? Do you want to learn about how to avoid the mistakes that not only I've made, but plenty of people I've worked with, how we've literally, in many instances, lost millions of dollars, and what we learned from it, and how we have improved. By the way, we've invested, over $100 million. We facilitated over $1.3 billion. So, and anyone that stands in investment space and tells you that they've never made a mistake or they've never lost money is either lying, cheating, or stealing. Let me say that again. Anyone that has been in the game for 20 plus years, like I have, 28 to be exact, and says to you they've never made a mistake or they've never lost money is either lying, cheating, or stealing. Okay, so I remind you of the formula. We want globally diversified passive income across countries, currencies, assets, partners, and time. I also want to remind you that what we're going to do in terms of partners now is, again, I'm going to be focusing on the top of the iceberg, but please remember that Wealth Going Global has been built with substance, a lot of substance. And I take an entire, what we're going to do today in one day, I do an entire module around how to find the right partners, how to manage risk, etc. So it's quite important in terms of just understanding that, I'm going to try and give you the value today, But if you want more substance, there's a lot of substance below the iceberg in terms of that process. So we're going through module 4, partners, the power of partnership, investing globally with confidence. The mission is to help investors become confident in their ability to choose the right partners and avoid the mistakes that 80% plus other people actually make. So how do you do partners and due diligence? So in the resources, we've actually got a couple of white papers, cheat sheets on, the different types of partners, and then how do you do your due diligence. So a lot of what I'm about to share with you, and Shane, can you just let people know where do they get those cheat sheets? It's going to be in the resources guide, huh?
Yep, that's correct. It will be in the resources guide by the end of this session.
Excellent. So if you've ever been a good student, you'll know there's nothing better than a bit of a cheat sheet. So everything we're going to share with you now will be in the cheat sheet that you can go and look at afterwards. So before we go any further, I've said to you all along that the most important thing when it comes to investing is that you need the right information and the right partners. Again, the right information and the right partners. I've spent 3 days trying to show you where to get the right information. Now we're going to the right partners. Now, there's many, many different levels that we could go into in terms of the partners. But I want to just share with you the 3 golden rules. And if you want to write this down, I would highly, highly recommend that you write this down and then leave. You can go home. Because these 3 golden rules, in my opinion, are the most important things when it comes to finding the right partners and ultimately making money with them long term. The first is that they've got a 10-year plus track record. So again, the markets move in 8 to 10-year cycles. Any idiot can tell you that they made money in the last 2, 3, 4 years. Anyone can make money in a rising tide. The problem is when the market changes, when there's challenges, that you find people's true substance. One of the things that I love, that my father taught me is that you shouldn't be judged by how you behave when it's working. You should be judged by how you behave when it's not working. You shouldn't be judged by how you behave when it's working. You should be judged by how you behave when it's not working. And so if someone has a 10-year plus track record, what's interesting is you can look at their track record and you can see how they behaved in the last recession. You can see how they behaved through tough times, because ultimately, the majority of people just run away. And you want to make sure that you've got a partner who stood the test of time. The second thing that you want is that they got specific market knowledge. There's nothing worse than someone that comes that says they know everything, because they don't. It's impossible. So, you want to deal with someone, like you're going to meet Judd today, who does industrial buildings in America. Like you want to deal with someone that just does industrial buildings in America. You're going to meet Bruce today. Bruce just does medical office buildings in America. You met Gary on, day 2. All he does is London residential at an institutional level. You met, who else have you met? You met Anthony, he does family office stuff. You met Ann Wilson, she does ETFs. So you want people with specific market knowledge, not everything. Now, probably something that should be going through your head is going, well, hang on, Scott, but you seem to talk about everything. No, I talk about it at a high enough level to be able to explain it to you. But if you come and be part of the mastermind, you'll learn that I bring in partners. I don't try and talk about London residential institutional. I bring in Gary Sachs. So my skill set is finding the right partners that fulfill these criteria to teach people about the different markets. So my skill set is finding partners. You might have realized it from all the different questions, and I do get confused between the main room, the one we're in now, and the VIP room. But I always default to who are the partners. And for me, it's if I want to find the answers, it's about finding the partners that have that specific market knowledge. And the last one is that they put their own money into the deal, okay, on the same terms. So a better word to explain this is alignment. And if you take alignment, okay, let me give you some simple examples. If you have a husband and wife and they get married, and one is marrying for money and the other is marrying for love, do you think it's going to work? Just put in the chat box here. We'll just give it some thought. So you got a husband and wife and they're marrying, and the one's marrying for money and the other one's marrying for love. Do you think it's going to work long term? Yes or no? What about if you got two business partners and the one kind of wants to have a lifestyle business where they can go surfing, all afternoon, and the other one wants to build a massive company and work 7 days a week? Do you think it's going to work? Okay. What about if you deal with an estate agent or a financial planner / broker, and they make all their money from commissions up front, and you actually are investing because they tell you to, but you make your money long term? Do you think it's going to work? Yes or no? Then my question is, why do you do it? Well, everyone does it. They go see the estate agent, they take all their guidance. They go see the financial planner, they take all their guidance. But those people get paid commissions up front. And then they're supposed to look after your money long term. It makes no sense. You need to deal with partners that are putting their own money in the deal and that are on the same terms as you. So when the shit hits the fan, and it won't always hit the fan, but probably 20% of the time, deals won't go according to plan. 10 maybe, but 10% maybe, but certainly 10 to 20%. You want partners that have money in the deal and are as committed as you to be tied to the mast of that ship and to sail through the storm. You'll be amazed how many people lose money because they're in deals where the partner has no money in the deal. And so they negotiate a deal where they, make all the money on the upside, plus they earn a nice big fat chunk of fees on the front end. And you put your money in with all the risk. And, if you lose money, you're the only one who loses money. Screenshot this, write this down, print it on your wall, do whatever you like. But these 3 golden rules are the 3 most important rules that I have found in terms of finding the right partners. So if you want to go into more detail, how do we actually do it? Well, we go out and we identify a sponsor. So we always start with the sponsor, a partner. So a sponsor is an American word for a partner. So in the property industry or the real estate industry, they call it a sponsor, but in simple terms, it's a partner. And we go out and we find the partners. Okay, so we don't start with deals, we start with partners. And we do a due diligence on the partner, and we make an investment committee decision on the partner. We then look at their deals. So most people try to do a deal, they look at a deal, then they look at the partner. We do it the other way around. We look at the partner first, and if they pass the test, then we look at their deals, and we do a decision on the deals. Then we make an investment decision on the deal. The deal goes live on the platform. We start to raise on the platform. We close the deal. It's called a book build. It's then set up through a structure. I'm going to show you this in a picture. We implement the investment. When the deals get distributed, they get distributed quarterly. We track the deal on an ongoing basis for however long it is, 1, 3, 5 years. The deal then exits. You get the capital gain on the back end. You get the return of capital, and you have your funds investment, ready for a new investment. So let me show you how that works. Before I do, myth number 8 is all about, people that say, oh, but I can do, all of this myself. If you want my honest opinion, it is literally such a scarcity mindset, old school mindset of doing stuff. And the reason being is that there's no ways, it is physically impossible to invest around the world, to diversify and invest around the world and know everything about every market, about every sector, about every city, about every asset class. If you take something like property, it is a localized, investment thing. You actually have to know the local market. And so if you think you're going to do a due diligence, and, I know a bunch of people that, they're super intelligent and they've got a lot of experience in a country like South Africa, and they sit in Pretoria and they say, we're going to do due diligence across the world. It's rubbish. And I've seen it not work, and I've seen them lose millions and millions of dollars. Because the point is they don't know the markets, they don't know the nuances, they don't have access to the best deals. And so the thing here is that it's not about the quality of your due diligence on a deal. It's about the quality of your due diligence in finding good quality partners. If you find good quality partners, they will bring you good deals. So I want to kind of give you a little bit of a foundation to this whole thing. So I've spoken quite a lot about this already. But I launched this book, Property Going Global, with Clem Sunter endorsing it in 2013. And again, he's one of the top 5 scenario planners in the world. And he speaks about all the different scenarios and the probabilities and flags. And I was like, well, that's fascinating. How do we do this? And I created the 4-dimensional model I've told you already. And he was so impressed by it. The rest is history. And it went into Property Going Global. That then evolved into GIDS, which is our global investment due diligence system. And so what we do, it's a 10-layered system. And what you really look at, and again, in Wealth Going Global, I go into this in much, much more detail. But what we look at is what are the macroeconomics? Which countries do we want to be in first? Then which currencies do we want to be in? Then which cities do we want to be in? Okay. And then we start to get to what is the different property sectors we want to be in? And then we find the partners. And then it's about the financial structuring and due diligence, the pre-purchase due diligence on the deal. It's about maximizing the investment. So again, it's 20% of buying a property is buying it up front. 80% is actually owning the property and sweating the asset. It's about the digital wallet, so you can get all the distributions and everything. And ultimately, it's about a secure investment, long term in terms of the process. So if you want to go into more detail on this, in Wealth Going Global, I literally share with you GIDS 1.0, which is our residential system. I forget how long it is now. It's 20 plus pages in terms of our entire due diligence system for residential. And then GIDS 2.0, which is our commercial process. So I literally go into all the detail of how to do this. And I share that during Wealth Going Global. So again, my philosophy in life, you can go and create all your own due diligence if you want to. Obviously, our due diligence has been built through experience, through mistakes. And, whenever you make a mistake, you enhance it and improve it. But not just ours, it's also from the partners we work with. What is best practice? So again, you've got kind of choices in life. You can go and do it yourself, or you can literally copy and partner with other people in terms of that. Just to give you an example, we've got a 132-point checklist where we put this together over the last 12 years or so, where we try to go through and really sort of look at the partner. We've had a number of different partners say that our due diligence is more extensive than they used to, but they only have to do it once. Once they've done it, you're going to meet Judd today or Bruce. Once they've done it, they've done it. Like, we're now doing our 4th deal with Judd, and we don't do it. We don't have that extensive due diligence every time because we know Judd's a good guy. We know that their deals are good and work. And so the heavy due diligence is done once upfront on the partner. Now let's look at the partner and understand how this all works. So this is not our way of discussing it. This is the worldwide way of doing it. But you've got different levels of partners. So you've got a tenured partner. Okay, so that means they've got 50 years plus management experience. The company's been going for 15 years or more, and they've got at least $1 billion under management. Then you've got an established partner, and you can see the same numbers there. You've got a developed partner, and you can see where they're at. And then you've got an emerging partner. And basically, an emerging partner is generally someone that's got a lot of experience. They've been doing it for a long time, but they've only started their company in the last 3 years. So you're looking at their previous track record as well as their current company track record in terms of that process. So let's just give you some examples. Feldman's a company that we've done 2 deals with. They've got $100 million invested from their family. They've got over 4 million square feet that they own. They've got 100 years experience. They've been through 7 recessions. I think they've been going 42 or 43 years, and they manage over $3 billion. So, that's a classic example of a tenured partner. And this was a deal we did with them right in the middle of COVID. I think it closed in December 2020. And I never thought in my life that I'd be investing in those type of bank buildings, but it's been paying a 9.6% cash on cash return and a 16% IRR. And you can see down the bottom here that this deal, the sponsor was tenured because it was, the Feldman Group. Okay, another example is MAG. They've got 300 million under assets under management, 43 properties. They've got a historical average of about 18% IRR and 9% cash on cash. And we did a deal with them. We've done a couple of deals with them. This was an industrial building. And again, you can see that they're in the 10-year space. This got an 8.3% cash on cash and a 12% IRR. So I'm just giving you an example of how this works. We did this deal with them as well, Hobbs Industrial. This was only a 1-year deal, so this was a debt deal. It paid a 10.5% cash on cash. So remember, this is all in US dollars and it's net in your account. But again, a 10-year sponsor in terms of that process. And then this is a structured note. And what's interesting here is you're dealing with BNP Paribas, one of the biggest banks in the world, AAA ranking, etc. So once again, you've got a 10-year partner. Then, to give you an example of a different type of partner, and actually you're going to meet Judd Dunning tonight as one of the partners who we're going to be, interviewing. But they're an emerging company. And the reason being, Judd's got over 20 years worth of experience, but his company, DWG Capital, is only been going for sort of 3 years or so. So that's why the sponsor is emerging. I love these guys because they pay monthly. So it's an 8% cash on cash and a 17% IRR. And again, another industrial logistics building that we did. Myth number 9, just by the way, is that people say to me, oh, but Scott, I've got $10 million. I'm going to go out and I'll buy this building myself. I go, good luck trying to find that building. Someone like Judd's been in the game for 20 plus years. He's got all the experience. From my experience, the good deals don't, and I'm sorry, ladies, what I'm about to say, but currently how it works is that there's an old boys club and a good deal is kind of farmed around the old boys club and someone snaps it up if it's a good deal. If no one snaps it up, then it goes on the open market. Okay. And if no one buys it in the open market in that country, then they take it overseas and they sell it to idiots from South Africa, Dubai, Hong Kong, China, wherever else, basically. And I use the words on purpose, idiots, because they sell stuff that they can't sell in their own country, that their own locals don't want, to international foreigners who don't know really what they're doing. They just want to invest in that country. So when people say to me, oh, but I got $10 million, I'll go and invest, I literally go, you're being naive. You will not get access to good deals. And on top of that, you also won't get access to good credit. So again, in different examples, and Judd will talk about it in his interview, where he goes and secures the debt, and he's going to get far cheaper debt because of his experience and his relationships with the bank than anyone as an international investor will. So, the myth is that you can do it yourself. And again, if you disagree with me, then I recommend you go and do it yourself. But I've just heard so many sorry tales where people have lost millions and millions and millions of dollars trying to do it themselves. And it just makes so much more sense, in my opinion, to partner with people on the ground, put your capital next to their capital, take advantage of their relationship and their partnerships and their networks, and also take advantage of their ability to get much cheaper capital in the local markets. So to put in perspective, if you want to do it all yourself, these are just some of the steps: country due diligence, sponsor due diligence, SPVs, KYCs, investor reporting, lawyers, brokers, legal, management agents, due diligence, tax, investor onboarding, client services, banks, local jurisdiction compliance, deal tracking, family office, all of the stuff. Or you can use technology and have 4 simple steps. Literally sign up for free, set up your account, browse the investments, and ultimately invest in the deals, in terms of the process and earn an income. So if you want to visually see how it works, because I know a lot of people want to understand it, this is your bank account, okay? And you've got investor A, you're investor A, someone else is investor B, someone else is investor C. So we work with Lemonway, which is the biggest digital wallet provider in Europe. And so you send your money to your Lemonway account, and they basically set up an account for you. So it's your account. You're in complete control. It's your digital account. You don't have to fly overseas or anywhere to set up a bank account. Then you go on the marketplace. So in our case, it's Wealth Migrate. You go on the Wealth Migrate marketplace, and you can actually go and look at deals. You decide you want to invest in a deal. I don't know, that industrial building that we've got in South Bend at the moment in America. And it's an investment opportunity. So you decide, right, I want to invest in that investment opportunity. We then aggregate it. So you can have 100 investors, you can have 1,000 investors, you bring everyone together. And it's the power, of people coming together that allows us to invest like the institutions. We then put it through a tax-efficient special purpose vehicle. So again, anyone that invests anywhere in the world and has done for centuries, they will always invest through a special purpose vehicle, but we do it in a tax-efficient way. And then finally, you've got the deal ownership. So the investor owns a piece of the asset, basically. It's 100% through. There's no funny business. When the deal pays a return, it goes back into a deal wallet, and that deal wallet then distributes back into the investor's wallets. So, this is a simple bird's eye view of how the money works. And then from your investor wallet, you can choose to do what you want. You can either reinvest the money into other deals, or you can put it back into your bank account and go on holiday to Disney World, or do whatever you want with it. Pay for your kids to go to university, whatever it is, basically. So this is the kind of the overall process. Before I go into that risk and compliance, I do just want to share with you visually what that looks like. So, because we've got a whole nother workshop that I go through this and how to use the platform, but I just want to kind of show you how simple this is, because I've been doing this. I wrote my dissertation in 1998 on how technology was going to change the property and construction industry, and then I did my master's in London in 2001. So you can do the maths. I've spent 20 plus years trying to figure out how to manage, marry together technology and property, and to make this process simpler and safer. So if I just go to a deal here, this is the industrial building in America. You can look at the videos, you can go look at all the pictures, etc. You can read about the deal. You can see what the cash on cash is. So it's an 8% return. It's a 5-year deal. So this is your income return. This is your total return including capital growth. Everything is net. So this is the net money that you'll get in your pocket. You can see it's an emerging sponsor. You can go down here and see the risk. So I'm going to talk to you right now about the risk, but it's a core plus. You can read all about it. You can actually go into the investment calculator. So you can say, right, I'm going to invest $10,000 or whatever. You can literally go through, and you can see the green is when the money going in your pocket, and the red is the fees. You can do it with fees. You can do it without fees. So complete transparency. You can go here and download everything about the deal. So again, if I go back to the deal here, I can download. So for those of you who like me that like paper, you can literally go and click on the brochures and read all about it, etc. There's fact sheets and all that. We don't hide the risks. So the risks are literally there. You can go read about them. You can see the milestones. You can literally read through everything, basically. And even I quite like this as well. If you just want to download everything on the page and print it out, well, you can do that as well. But let's just keep it simple. I want to invest. People say, what's the minimum investment? It's $10 at the moment. So, no one can give me the excuse that I don't have money. So literally I decide, right, I'm going to invest in this deal, $10. I go and click and I digitally sign the agreements. I literally go, I agree, and I go make investment. And believe it or not, ladies and gentlemen, but I have if I go to my portfolio, I've just invested in that DWG deal. Now, you can see that I've literally invested in this. I don't want to, invest in this deal twice. So I'll just go cancel my investment because I made a mistake. I go remove my investment. I go close, and it's gone. Now, I'm going to go back to the chat room quickly because I know the people in the VIP room have seen this, but please explain to me where you can go into America. You can invest in America. You can then go to Germany and go, right, I'm going to invest in this German mixed use building. Also with $10, by the way. And I can go agree, and I go make investments. And I go view portfolio. And I've now just invested in Germany and in America. So an industrial building with a different partner, different currency, different country, different asset class. And I've just invested in Germany. Please tell me where else you can do that in the world. I get pretty excited. I normally scream and shout and get all excited, but Shane said, Zoom switches me off when I do that, so I'll try not to. But the reason being is that anyone that's ever been doing this for as long as I have knows how hard it was even 10 years ago. Like if you want to invest in America, you had to fly to America, you had to set up a company, you had to set up a bank account, you had to, go and buy a house. Now you're investing in industrial buildings with these really, really institutional level partners. and you can do it from $10. Like, you know, now don't get me wrong, everyone goes, oh, you know, I'm not a $10 investor, I'm a really sophisticated investor. Our average investment size is $37,000 per investment per deal. We've had many people invest $1 million plus per deal. So just, you know, don't get confused by the $10. But, you know, our philosophy is just, you know, anyone can participate. And Hester, you know, you say almost like easy equities. It's very similar to easy equities. I know Charles Savage really well. The point being is easy equities is for South Africa. We're the only platform that I'm aware of where you can invest and diversify across countries, currencies, assets, partners, and time. Okay, so I just want to show you that why I want to show you that is that I don't want today just to be about theory. I want you to know you can actually do it. And no disrespect, but I won't take excuses, because whether you use Wealth Migrate or some other platform, I don't care. But no one can tell me they don't have the money, the knowledge, or the time, because I'm showing you where to get the knowledge. I'm showing you how to do it in a time efficient way. And I mean, if you don't have $10, well, you know, stop buying Starbucks. Okay, so let's go into managing risk and compliance. So again, we've got cheat sheets on this, which you'll have in the resources that you can go read all about. So just from our perspective, we FCA approved FSP, which basically means we're a juristic rep in England. So we believe that England's the financial capital of fintech in the world. So we're out of England. Lemonway is our digital wallet provider. They're out of Europe. They're the biggest digital wallet provider in Europe, 8 million wallets. And they've got European compliance. It's a defined financial product. It's got phase protection. It's got European cash custody. So your money's protected in Europe. We don't actually touch your money. This is really important. Like, your money's protected. It's separated. It's in Europe. It's got multi-layered compliance. So we've got external compliance officers that sit in England. We've got transactional wallets, and we've got data protection and investor database ring fencing. So your data is highly sophisticated and protected. Then what safeguards your money? Because any investor should be saying, well, how do I protect my money? Well, firstly, we've got external cash custody. So what that means is that we don't touch your money. So you're not giving me your money and I could steal it or go on holiday with it. Your money is going directly into Lemonway, and then from Lemonway, it's going directly into the deal. You got discretionary portfolio manager. So what that means, you got external governance over the deals. So the operational team and the deals team are separate. You got designated investor accounts. So every investor has their own investor account. So you don't have these old school trust accounts where some lawyer or accountant's trying to manage it, on a spreadsheet. You got ring fence deals. So every deal is ring fence. So you can't have Peter robbing Paul. And in the VIP room, we had people last night asking us what's the difference between a REIT and a platform. I'm not going to repeat it all, but in simple terms, I always say to people, what's the difference between a yellow taxi cab and an Uber? They're both a car with four wheels, a steering wheel and a driver. But if you think about it, they're materially different. The one has technology and the other one doesn't. The one's old school, the other one doesn't. So in exactly the same way as Uber, we've cut out the middleman, we've cut out the costs, and we've dramatically increased the trust, the transparency, and the accessibility. You've got designated corporate members, you've got external custody of investment, and finally, you've got operational and investment segregation. So these are all things that have been put in place to protect investors' money. And again, it's what we've learned, with 28 years of doing this, what is best practice basically in terms of that process. So how do we select and designate our deals? So we started with talking about the partner. Now it's about the deal. So again, in Wealth Going Global, I spend a huge amount of time, a lot more time going into this. But in a simple level, the way that this is done around the world is on the left-hand side, you've got returns. So you go from low to high. And at the bottom, you've got risk, and you go from low to high. So you've got core, core plus, value add, and opportunistic. So simple terms, core are deals that are done. It might be in central London or central New York, Manhattan. And it's a really good quality deal. And you've got a government tenant for 20 years. It's really, kind of a no-brainer from a risk perspective. But they often have very low returns. So pension funds, tend to invest in these type of things. Then you got core plus. They might not be in New York. It might be in a city like Atlanta, which is a massive city, 6 million people, but it's kind of a tier 2 city. Or it might be in Tampa. We did that deal in Tampa with Feltman. So it's a amazing partner, great building, great tenancy. It's in Tampa, so it's not a kind of tier 1 city. So that's called a core plus. We love core plus, by the way, because they're low in risk but good in return. Then you got value add. So what value add often is where there's some sort of value add component. So maybe buying a building that's only 70% occupied, and you're wanting to fill it up, or what's some other examples? There's maybe a strategy where you're going to buy a multifamily block and you're going to increase the rents over time. So you're going to increase the overall rents, etc. So those are the type of value add strategies. More risk because it includes operational risk. And then finally, you got opportunistic, and that tends to be things like new developments. And there's a lot of execution risk in that. They tend to be higher return, but they're also definitely higher risk. And opportunistic is something where we've certainly burnt our fingers a few times, because everything looks great on paper, but it has to be executed. And often a lot of the stuff is out of your control. So I'll give you an example. In Australia, we did a development, or not us, but our investors and our partner did a deal back in 2016. And it looked like a great deal. It was a 50-unit development, kind of a stock standard, property residential development. They had their pre-sales in place. They had the funding and financing in place. It was a 28% return in Aussie dollars. It all looked bloody good. I put my own money into this deal. And then, the Chinese government changed the rules overnight, and Chinese people couldn't invest anymore. So they lost a bunch of their pre-sales. Then, the banks pulled on the funding. And the problem is they'd already dug a hole, and they'd spent about $5 million digging a four-story hole in the ground. And it's been I don't know how to say it any other way, but it's been an absolute shit show, because the developer went bankrupt and ran away. And as I said to you, that old school mentality of trying to do everything yourself, these guys in Pretoria that made the decision, have also run away. And now us investors are kind of stuck there with a big bloody hole in the ground in Brisbane in Australia. So I'm going to talk more about that. Unfortunately, with me having to move because of the electricity and the internet, I don't have my whiteboard with me. And I want to show you. And so, Shane, please, can you make a note where I'm going to do this tomorrow consciously? I'm going to show you the difference on the whiteboard between scarcity mindset and old school thinking, and abundance mindset and new age thinking. And it's really important. I need my whiteboard to show you how this works, because it's fundamentally important. And when people say to me, Scott, how did you make mistakes and why did you make mistakes? One of the reasons that I separated with my previous partner was because they were very old school scarcity mindset, which meant they want to put all their money into the deal and own the deal and have complete control. But the problem is when the shit hits the fan, you have to try and manage that deal from long distance with no skills in that localized market. You compare that to new age thinking and abundance thinking, and the deal we did in Manhattan now, where it was a $14 million deal, about a $9 million raise. And, of that, about $7 million got raised from Americans, high net worths and institutions in America. $1.5 million came from Callio Capital, who you met yesterday, our family office partner, and we invested $500,000. I would much rather have a small minority position. People go, yeah, but you can't control the deal. Brilliant. I don't want to control the deal. I'd much rather be a sucker fish on a whale. And if shit hits the fan, I promise you the Americans will step up and make sure stuff happens, compared to if we're a bunch of foreigners that take the entire deal down long distance, and now the shit hits the fan. No one cares. The regulator and them don't care about foreigners in any country. So I don't know if that makes sense. I want to share it more tomorrow with my whiteboard. I apologize for the internet. There's nothing I can do about it. But this is such a mindset shift, because even I have lost a lot of money by trusting people that kind of have that scarcity mindset and kind of want to control everything. And I put my money into those deals. There were medical deals in America through another company that does a lot of stuff through the Seychelles. And, they put all their money into one partner, and but they control the deal, the whole deal. Okay. And the problem is the partner went and did something fraudulent. And now we, the investors, are losing all our money. We've lost our income, but we're also losing our capital. And the American regulators don't care, because there's a bunch of international investors. Now, how different would that be if we'd put our money like the Manhattan deal, where we put our money alongside highly sophisticated, high net worth and institutional investors from America? Like, we'd just be sucker fishers watching them solve the problem. Are you starting to get the point of how important it is to get the right partners? And more importantly, to make sure you got local partners with local money. Yep, you get carried along for the ride. I'd be a sucker fish on a whale any day of the week versus a mom and pop investor trying to control everything. It's such an old school way of thinking. And I'm sorry I'm being direct, but it really is. And yet so many investment houses out there are still old school. They think they have to do everything themselves. They think they have to control everything themselves. And they, the people that have lost me the most money, lost our investors the most money, and are going to continue to lose money over time because it's the wrong way of thinking about how the world works. So when it comes to tax and structuring, this is a whole separate area, but you need to be very careful here. There's a lot of companies out there that will sell you, they'll put you in a box. Again, I think I spoke about this in the VIP last night. You know, whether it's the Cayman Islands or Mauritius or the Seychelles or, you know, the Isle of Man or, you know, BVI or wherever, and they sell you a box and then they only sell you stuff that can go in the box. And they never actually talk to you and your family and what do you need for a bespoke, holistic solution. And that's why I love Calio, quite frankly, because they don't put you in any box. They understand what you need in terms of your family, where you want to go over the next 5, 10, 20, you know, generational wealth. And then they help build you a bespoke solution. And it is so, so important that you actually do that in terms of the process. So, you know, if you're someone that wants a simplified solution, like Neil spoke yesterday, you know, you don't want the hassle and complexity, but you want a personalized bespoke solution, then I would seriously consider the mastermind, because we partner directly with Calio, and anyone that joins the mastermind gets that personalized solution from Calio in terms of that process. Okay, so again, just to, you know, repeat, you know, you met the Calio team yesterday, you met Garth, you met Anthony, and you know, I've always been amazed. You heard from Niels what happened with his experience, and tomorrow you're going to meet Abdul, by the way, and I've always been amazed by, you know, how they can simplify things for people, how they can optimize people's portfolio, how they can give people peace of mind that they finally got one partner with one plan. It's simplified. It's the most effective and efficient way of doing it. And ultimately you can get results. So, yeah. Again, if you are interested, we will give you these 3 resources. So they're all white papers. So it's Investing with Confidence, the 5 Laws to Wealth Through Real Estate. And that, you know, that's really for beginners. The Intermediate, which is how to invest offshore, the 5 keys to offshore real estate investment success, and then finally the 5 ways to expand your global real estate portfolio through strategic partnerships. So yeah, that's it. However, I want to remind you, I started off today with this. The most important thing is that you get the right information and the right partners. So if you've enjoyed the little bit of what we've just been through today, what I would recommend is that you sign up for our next investor roadmap workshop. It's free. If you take action right now, it's free. No, I'm joking. There's no sales pitch. It's free. And literally, we take you, this was Shane's invention again. So you're sitting here and you want to get to globally diversified passive income. And we take you through the 6 needs of every investor, creating a wealth plan, the investment categories, partners in due diligence, managing risk and compliance, setting up your investment platform, how the platform works, investing, and ultimately earning. So it's literally, there's the fundamentals, is the bottom, the foundation. Then it's all about the setup. And finally, it's about the investing and the results. It takes about 4 hours. And it's literally, we guide you through this 9-step process where you go from, I don't know what to do, to, you know, actually investing and getting results. Fair deal? Yes. We should probably charge, you know, a shitload of money for that, but we don't, because we love to share and teach you how to do it. Okay, what is this saying? So the next workshop is Wednesday, the 6th of March. So that's interesting. That's next week, if I've got my maths right. Next week, Wednesday. Is that right, Shane?
Yes, that's correct.
Cool. I'm glad to see Shane's got me working at night again. It's very kind of him. Anyway. So this is the formula. Globally diversified passive income at the middle, you know, literally diversify across countries, currencies, assets, partners, and time. I think I've probably indoctrinated you enough with it. But I got a question for you, and I want to challenge you with an extremely direct question. Do you want to play a little game? Can I have your permission? Can we play a little game? Okay, so A bunch of people have said yes. Okay, cool. Let's play a little game. So if you're given a serious medical condition, a doctor comes along and says, right, you got this diagnosis, it's a serious medical condition. And they say you have to lose 10 to 15 kilos as quickly as possible. You got no option. Like it's literally it's life threatening if you don't. Now, again, I hope this never happens to you, but just I want to prove a very important point. So just to remind you, like you have to achieve this. It's an absolute must. You can't, like, this can't be a want. You have to make it a reality. You can't try your best. You have to make it a reality. Like you literally need to do what it takes. Now you get given two options by the doctor. The one is you can go home and buy a home study course on how to lose weight and supposedly do it yourself. And the second is a trainer turns up at your door, 5 a.m. every morning, knocks on your door and says, right, time to go train. The question I've got for you is, which one would give you more confidence in getting results? The home study course or the trainer? Option two, the trainer. Yeah, I think we'd all agree it's kind of a no-brainer that like a trainer or a coach is going to hold us accountable and help us get those results. Now, imagine if we had that same thought process when it came, that's a silly example, but if it came to our wealth. Imagine if we had that same thought process when I need to build 5,000, 10,000, 15,000, whatever it is, $1,000 globally in globally diversified passive income. Imagine if that wasn't just a wish or a dream or a want, but it was a real need. It was I'm not going to do my best. I'm going to do what it takes. Now, for some, investors, some people that are super experienced or sophisticated, confident, or even motivated beyond belief, we've got what the doctor ordered. We've got the home study courses. I've taught you need the right information and the right partners. We've literally built Wealth Going Global. It'll give you the right information. We've built Asset Mastery. It'll give you the right partners. It literally introduces you to all the right partners in all the different asset classes from around the world. It teaches you about that asset class. It teaches you the pros and cons, and it shares with you real life opportunities. So, you're not only getting the right information, but you're getting the right partners. So the home study courses are there. And what's more important is that for over 2 decades, we've been doing this, and we've helped many, many, many people do it already. But what we wanted to do was to come up with a more effective option, because what we've learned is that the majority of people that say they're going to do it don't actually do it in terms of that process. And so we decided how can we work with a coach and a team to actually help people get their wealth system and build their portfolio in terms of that process? How do we have one-to-one support and coaching every step of the way, but do it in a low-cost option? The old days of meeting people face-to-face, it was really, really expensive to be able to do it in terms of it. And so the question is how? And it's simple. It's literally, I've already alluded to it. It's the same way Uber took out the yellow taxis. It's the same way Airbnb took out the hotels, or Netflix took out Blockbuster. Because for 20 years, we've literally been in this process. I've told you already, numerous coaching programs and masterminds myself, and heard thousands of accounts from different investors and said, how can we do this in a far more effective way using technology and helping people get results? We realized the investment space is broken. I mean, honestly, Alex and I deal with people daily that complain about their current investment experience, their current portfolios, their current financial planners or bankers or whatever else it is. And it literally is broken. And if we disagree with me, that's fine, but let's go look at the results. Why at the age of 65 is only 1 person out of 100 retiring wealthy? It's ridiculous. It is broken. It is not working. Where, the majority are either broke, dead, or reliant on the government. And even the 5% are financially trapped. And again, Alex, you and I meet them almost every day. People are like, oh, I don't have enough money, and I hope that my money, I don't outlive my money, etc. It's a horrible, horrible place to be. And I don't believe anyone needs to or should be there. So we fixed it. We've got the home study courses. If you want to go and do it yourself, you've got Wealth Going Global, the right information. You've got Asset Mastery, the right partners. But according to Harvard, you've got a 400% better chance if you've got a coach. 400% better chance if you've got a coach than doing it on your own. And I remind you of this video. I played you this video yesterday, but I want to play you this video again, because you've got 400% better chance with a coach, but maybe there's even a better way than doing it with a
Now,
coach.
this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have done this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So I mean, just take that. Okay, you can do it on your own. If you have a coach, according to Harvard, you're 400% better off. And if you do it in a mastermind, you're going to get 5 times quicker results than if you have a coach. Now you can do the maths, but in simple terms, it's 5 times 4. It's like 20 times better than trying to do it on your own. A mastermind, which is a group of like-minded people, a small group of like-minded people working together to get an outcome like globally diversified passive income, with someone like me leading it, and with partners like Callio, you're going to get there 5 times faster than if you do it with a coach or a one-to-one consultant. And you're going to get it there 4 times faster than if you try to do it on your own. So 5 times 4 is 20. You'll get there 20 times faster than trying to do it on your own. So again, I showed you this yesterday. Here's your comfort zone. And if it sounds too good to be true, that's your brain playing with you. That's your internal and external beliefs. Because ultimately, I am here to challenge you, to get you to where the magic happens. So that's what the mastermind is all about. I shared this with you yesterday. There's 5 different areas. The first one is I get very clear on the outcomes with you. It's a one-to-one coaching session. So we get completely clear on what your top 3 outcomes are, your top 3 measures, and we write them down. Then we go to your starting point. We analyze your current property portfolio. Callio works with you to optimize your current structure, be it your pensions, your providence, your everything that you've got, so that you optimize what you have. So we know where you want to be. We know where you're starting. Then we build a wealth plan to help you get from A to B. However, once you've got a plan, it's all about the execution. So on a monthly basis, we check in. We've got accountability, mindset, and execution. We're keeping you in a towards state. And that's what a like-minded group of people do. And it's all about the monthly execution, the accountability to get results. And then finally, it's about the investment. And this is the investment rhythm. It's about learning from Anthony at Callio every single month about what's happening in the markets. It's about asset allocation. It's about analyzing and going into each different asset class per month, going one asset class per month. And then it's about investing and ultimately reviewing the deals. 5 simple steps. Simplicity is power to help people get results. So, why was the mastermind built? Well, it was built for people like Jordan. Jordan's a high net worth, 55-year-old, worked very hard in his life. He wants to build a portfolio to ensure his wealth is preserved. What does he want? Globally diversified passive income of at least $5,000 a month, $10,000 a month, $25,000 a month, simply and safely. He wants to diversify his investments across countries, currencies, and assets. He wants to use his limited time to get effective results. The mastermind has been built for busy people that don't have time, but that want to get results with predictability. He wants to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wants wealth protection, a plan B, and peace of mind. He wants to be held accountable. Again, most of us have learned, particularly people that are successful, have learned there's nothing more powerful than having someone that's your accountability partner to get results. He wants a family office to help him manage all his financial affairs. He doesn't want to do it all himself or go to a myopic, financial planners. He wants one holistic solution, a family office to help him get his results. He wants to create generational wealth for his family. He wants to have a fully executed wealth plan and investor strategy sheet, and he wants to get results. Or it's Victoria. She's an entrepreneur in her 50s. She's devoted to her family and business. She's aiming to build generational wealth. She's got a packed schedule, but she seeks a streamlined investment strategy that empowers her to make wise decisions, aligns with her goals, and frees up her time for her grandchildren and daughters. She wants to understand the investment landscape. She's tired of being told by other people what to do. She wants to feel empowered to make the right decisions for herself and her family. Victoria's focus is on achieving financial freedom to cherish more moments with her and her loved ones. And I want to share with you a real life story of Cynthia, because Cynthia has been part of the mastermind for over a year, and she's met with the Calio team. And what a lot of people think is that, oh, but this is only for the rich and wealthy. Cynthia's a teacher, and she's going to share with you her life story. And she literally said, yeah, thank God for the mastermind, the partners it brings us, and the exponential learning curve that it's gifted us. So I'm going to share with you a quick interview with Cynthia. And then when I'm finished with Cynthia, I'm going to share with you Selwyn. So Selwyn comes from the Calio private equity team. He's got a PhD from Cambridge in mathematics. And he's going to share with you how they do their due diligence on partners and how you find the best partners. So again, I'm literally going to share with you some of the best in the world on how to do this partner and how to manage risk. But let's just start with Cynthia here quickly. Where's she gone? Here she is. And when you listen to the story, just think about what she's saying. And if she can do this, then I guarantee you that you too can do it. So Cynthia, thanks so much for joining us. I deeply appreciate you jumping online. I was hoping for you to be there live next week, but you're off to Paris. So sounds like you've got an exciting trip organized.
More rugby, more rugby. Can never get enough.
Fantastic. So you've got a confusing accent for everybody. You've got an American accent, as I understand, you know, did a huge amount of business in Hong Kong and now live in Italy. Tell us a little bit about yourself, just so the kind of people know who you are.
Yeah, I'm an American. I graduated from college and spent 10 years in New York City in the advertising profession. And during that time, I kept putting on a backpack and leaving and traveling around a part of the world and putting on a backpack and leaving. And the third time I did that, I backpacked around Asia and ended up in Hong Kong permanently, ironically, to watch the Rugby Sevens. And I rolled into town to watch the Rugby Sevens, and I stayed 10 years. And during that time, I worked in marketing in China. So I continued my profession. And I, relevant to this conversation, I took my first year's salary almost, because I was running around with backpacking money, $100 there, $100 here. I took my first year's salary and just banked it into what I thought was a mutual fund. It was something all the expats were doing. And then I just left it for 25 years. And I worked in Hong Kong, and I met my husband and had 3 kids, and we didn't want to raise them in Asia. And we decided to move to Italy. He was English, I was American. We decided to move to Italy, got to Italy, and, you know, started renovating a big house. That was a big money sink, and went into olive oil picking, olive oil making. So farming, that's a big money sink, as all the farmers in our mastermind know. And yeah, so I ended up here separated from my husband, with not having worked for 15 years, because I'd been a stay-at-home mom and an olive oil farmer. And yeah, that's how I ended up. That's how I ended up finding you all. I think I took Scott I took an online course. It wasn't even an online course. It was one of those Jeff Hayes film productions, like Money Matters or something. It was just money
Revealed by Jeff Hayes.
Yeah, Money Revealed. And I met you on that, or I listened to your speech on it, about how property was the last bastion of the wealthy, and that sort of one thing that the average person doesn't get into. To get into property back then, 20 years ago, you needed to have a lot of money. And you talked about how you wanted to make people with $100, $1,000, eventually, $10, be able to get into that. And it always stuck. And I didn't see or hear from you again for 5 years. And then I think Wealth Migrate came up on my radar, probably some social media radar. And I jumped on it. And that's how I found you all again.
And what sort of challenges were you facing at the time? Like, what problems and challenges? We all, there's a great thing that we move 5 times more away from our problems than we do towards our pleasures. So we tend to take action because the problem is not pleasure. So what were the problems or challenges you were facing?
Yeah, the problem was huge. The problem was I'm living in a foreign country. I can't go back into my old career, which was China media, because I'm living in Italy. I had 3 kids to feed. I'd left my husband. And I was like, where's my skill set? So I was actually at the stage of like, just how do you put food on the table? And I, found a place to live, suddenly had 5 income streams, and all 5 of those income streams dried up during COVID. And it was the first time it hit me that I was working for money, working, selling my time for my hours for time, and that my money wasn't working for me. And COVID and that incident and that realization happened at the same time that 20-year fund came to maturity, and I suddenly had a chunk of cash. It wasn't a lot of cash by any means, but you got to start with what you start with. And I was in that frozen position of like, what do I do with it? Like, I need this money to work for me because I'm over here scrambling to find a job and to put food on the table for the kids. And I didn't have any debt. I was fortunate. I owned my own home. I owned my car. I didn't have any credit card debt or anything. So in that way I was lucky, but I was really at that paralyzed, what do I do? What do I invest in? I've read enough, read The Motley Fool every week for 30 years. I thought I was relatively financially literate, but I was frozen. I was just like, what do I do with it? Because no, I was just saying, it was just at that age, where my kids are 20, they can make fiscal mistakes. And I was at that age where I felt like I don't have another, ride it out 20 years and the stock market always rebounds. I don't have another 20 years to ride it out. Like I had to do that's what my fear was.
A lot of people talk about wealth protection, and that's what I'm hearing. It's one thing to grow your capital, but you also want to protect the capital you've worked, so hard to create over the years. Why did you choose to work with us? What was it that attracted you?
I mean, I had finally found people that were exactly like me, like from multiple parts of the world, maybe dealing in multiple currencies. We have, some gentlemen in the mastermind that might be South Africans. They're living out in New Zealand. They, the typical, the old-fashioned 5 flags. You live in one country, you earn money in another, you've got a bank account in a third, you pay taxes in a fourth. And it doesn't really exist anymore. But it was very hard to find like-minded people who understood different parts of the world and who naturally understood diversification. And the mastermind narrowed that down and made it even more specific, diversifying across time and currencies and assets, is even more focused. But just the general idea of diversification. I mean, all my European friends just invest in European things, and all my American friends just invest in US things. And a lot of my Hong Kong Chinese friends are heavily invested in China and the BRICS economies. So I really liked that. And then I liked the overall philosophy that we were trying to make what's available to the 1% available to the average person. And that really resonated with me, because no matter how much you learn, you're always thinking, what's that little bit I don't know? What's that part of the puzzle I don't know because I'm not, a high net worth individual.
So tell me, in terms of, you took a leap of faith. We've all done this, where it's like your sort of intuition's telling you to do something, but there's a cost involved, and you're like, I don't know if this is going to work for me. And what's been your experience? I mean, we've been on a journey now for the best part of nearly 12 months, actually. And what's been your experience, being part of this diversification mastermind?
This diversification mastermind was different from every other sort of course or challenge or, I don't know, group I've ever joined, because it took you from the philosophy of how you're supposed to be investing and actually provided us with answers. So it took us from, it's not just, I didn't need the mindset stuff anymore. I felt like I was already there. And it took us from the mindset right to like, well, here's some ideas that you can invest in. And, let's all jump into this together. And if you're not going to invest in what we're providing, here's some other experts in different asset classes who you can go buy a promissory note from, or go buy an EFT from, or go talk to someone in a private, what do they call it? The family management, family asset. What are they called? Yeah. So you provided us, you weren't trying to be all things to all people. It was like, I'm Scott, I'm the property guy, this is what I know. And I'm never going to try and sell you a commodity. And I'm never going to try and sell you stocks and bonds, because that's not what we focus on here. But if you want those things, here are those experts that we're bringing into play as well. So I liked it that it was, it was holistic. Everybody sort of knows what they know, and that we draw on the experts in each related field for people to either choose to work with or not. But so you got that learning curve, but you also get that ability to to execute and make investments with where you want them.
I think what you just said there is so important. It's the execution. At the end of the day, we got to get results. And, there's absolutely no point in getting more knowledge. And, it's that whole saying of people think knowledge is power, and it's rubbish. Applied knowledge is power. So, one of the things I love about your story is that, you've gone and met with Callio. So, again, I would have talked quite a lot about Callio already, but, most people don't get access to a family office. A family office is literally for the super wealthy. They manage $600 million, only 60 families, but through an alignment of interests, actually. So they believe in, helping everybody get access to the same information, the same opportunities. And because of that, they agreed to exclusively work with the mastermind. And because of that, you and I have got access to their skill sets. Talk us through your experience with Callio, because it's been an interesting one to get your feedback.
Callio is phenomenal. You have a half an hour free Zoom meeting with them, and with the president in the room, not just someone who's going to execute. And they say, "What's your story? What are your needs? What's your financial situation?" And I pulled up that matured fund that I had and said, I need to invest this, but I don't want to, I can't invest it for the long term. Here are my needs. I have immediate goals. I have 3 children that have just gone off to college. So I suddenly have immediate financial goals that I'm not going to be able to meet if I keep just relying on my income or selling time for money. And they listened. They asked really smart, relevant questions I wouldn't have thought of, but they were particular to me. And I didn't feel like I was being put into a box of, you're this type of investor, or you're this type of investor, or you're this type, And it wasn't just the are you high risk? Are you low risk? It was really they really tried to understand my needs. And within 24 hours, they had a proposal to me that said, here's what we're going to do to get you money right now. And then here's what we're going to hold off on and keep discussing and think about and get you into eventually. But here's what we're going to do to solve your immediate problem. And within 1 month, I had income coming in from an investment from them, which just liberated me. I mean, it was just the buffer I needed to not panic about money anymore, and to make the rest of the decisions slowly and, from a different mindset.
It's so interesting what you're talking about there, because the most of us just go along, we meet a financial planner, they put us in a box, we stick our money into something we don't even know what it is, and we don't get paid an income. We get promises of long-term retirement, but we don't get an income. And what you just said there is, within 1 month you got income back in your pocket. Now, in my belief, income is freedom. So and I mean, I know for you don't need to go into the personal story, but even then, I mean, it had a dramatic change for you in quite a quick space of time to give you that peace of mind.
A huge space of time. I mean, I'm an online English teacher. The year after COVID, the Chinese government banned all English teaching online. And I went from a 7-day-a-week job to nothing, to zero. And it was, and given that it's China and China's unpredictable, there's always those undercurrents and those rumors among online teachers. They're going to do it again. They're going to do it again. But having that financial buffer means to me that if it happens again and China locks out all online teachers, I'm not going to be sitting here with zero income. I mean, it's a safety net that's just unbelievable to me, that someone who is not by any means a high net worth individual can have your money working for you, can have my money working for me, and give me that peace of mind.
Yeah. So tell me, 12 months ago, you could have been like so many other people. And again, thousands, I don't even know, hundreds of thousands of people have watched me present over the last 20 years. Most of them sort of hear it and don't do anything. 12 months ago, you heard it, took action. If you hadn't have taken action, how would the last 12 months have been in your mind? Like, what would have been the difference?
I can definitely tell you I would still be sitting there with that matured mutual fund in the bank account or pension fund doing absolutely nothing, because it matured 2 years before or a year before I met you all. And I was like, right, get this invested. This was, it was the #1 goal every month. Get this invested and doing something. And I just didn't know what to do. I had so many ideas and so much information coming from me. And that's where I was 1 year ago. And, within 2 months of starting the mastermind and, 2 weeks of meeting Callio, that money was invested and working for me. And I honestly believe that if I hadn't found you all, I'd still be sitting on it. It would still be doing nothing. It would still be sitting in a bank account waiting to be invested.
Yeah, no, that's brilliant. Or maybe worse, given to a financial planner being eaten away by you know what I
to
mean?
lose more money over 20 years, right?
Yeah, exactly.
Yeah.
Tell me,
Yeah.
why is this different? You know, there's lots of masterminds out there. I mean, there's a plethora of information on the internet. Why has this been different for you from, you know, your other previous experiences?
Yeah, the fact that our philosophy is all this is we're all going in the same direction is wonderful. But I think you know, certain segments of our life, and you know, when you go into that initial conversation with all of us masterminders, you know, you're breaking down what are our personal life goals, what are our financial goals. You know, life is more than just finance, but finance is one of those highly emotional, you know, people have a hard time talking about it. You know, it's not polite to talk about money. Maybe we don't discuss it with our best friends, but the mastermind is that one place I can go to where we're all talking about money. It's allowed. It's, you know, it's the purpose of it, and it's that space where we all throw out our, you know, our mistakes. You know, you've shared with us, you know, I tried this and this, you know, this is what happened to this property and this didn't work. We all can throw out our situations, and we're just all in the same space. We're all in that. Let's talk about money. Let's learn as much as we can, and you know, what are the next steps? What are we going to execute for each other? And it's just such a nice space to be in, because you can go out in life and maybe not even talk to your spouse or your best friends or your brother or your kids or your, you know, about money. And it's just that space, because it's such an important part of our lives. And it's that space where we all have permission to do that, and we're all going in the same direction.
Yeah, no, I love what you said, and I think, you know, there's so much power in collaboration, you know, and you know, again, just simple metaphor, birds flying in a flock can go 70% further.
Yeah.
You know? So
Yeah.
unfortunately, I know that, I don't know if you were the same, but certainly myself, I was trying to do it all on my own for 14 years.
Yeah.
Like, this was like, yeah, I'm getting nowhere doing this strategy.
Right.
Tell me, last thing, if someone's sitting in you know, they're sitting here, they're watching this, and they're sort of saying, it sounds too good to be true. I don't know, like, what should I do with my life? Have you got any advice, like, to them? You know, you've been in that situation. What would be your, you know, advice, recommendation? We don't get financial advice.
I think the problem is that if you've made it this far in either the Wealth Migrate platform or the Wealth University you've done, you're already an intelligent person, and that almost works against us, because we go like, I'm smart, I can do this, but oh my God, EFTs. All I have to do is Google like top 10 EFTs, or, you know, jump onto one of those crowdsourcing, you know, platforms or so. I can do this by myself. And I think it's almost a hindrance being somewhat financially knowledgeable. I mean, it's almost a block, because you get to that. Yeah. I've taken the course. I've done a challenge. I can figure it out from here. But there really isn't anything like finding the partnerships that we have in this group. I mean, there is no way, for all of my love of reading financial, you know, documents and being on financial websites and blogs, there isn't any way I would have ever found the partners to invest with and to invest in, without being in this group. There's just no physical way I could have ever, you know, industrial buildings in Texas, or, you know, healthcare centers in Brisbane. How am I going to find those sitting here in you know, in the middle of Europe? So yeah, I think the partnership is the number one reason to join the mastermind. It's not just about the knowledge, it's about how do you execute. But you can't execute unless you have the deals in front of you, and you can't have deals in life, in any aspect of life, unless you have good partners. And it's the partnership that I would highly recommend people to, you know, it's worth the entire investment. Yeah. Is the partnerships brought.
Well, thank you so much for your time. Now, thank you for sharing. Right. And you know, for me, the thing that I'm most grateful for with the mastermind is the amazing community that we've got. And you know, you're one of the stalwarts that are leading that community with your energy and everything, which I deeply appreciate. And I love, you know, what I love most about your story is that most people assume that everyone's like, you know, uber wealthy and got millions of dollars and, you know, highly sophisticated and whatever. And we're not. You and me are not like that, you know, and yet we can get access to the same knowledge and the same partners. And the thing I love most about when you shared with me your story, it was like, well, look, I've listened, I've acted, and look at what it's given me, and in quite a short space of time. And I think I just deeply appreciate you sharing that with people, because hopefully it can inspire others to get the results for themselves.
Yep. I would say jump. I mean, I can't, when I think of where I was 1 year ago, it's a million miles away. And not just because I have income coming in, but knowing what my next steps are. Like, I know where I'm going. I know where the next chunk of money is going to go into. I know what, I want to invest in. I know what I don't want to invest in. And I know the partners that I want to do it with. And that's just a huge weight off anybody's, financial shoulders.
Awesome. Well, we look forward to further results from you. Thanks so much.
Good. Thanks, Scott.
What did you think? So I sort of said to you up front on day one, I said to you, just leave that door open from a hope perspective. Maybe your internal beliefs or your external beliefs are really strong and you say it's not possible, or maybe the vehicle, like, it sounds too good to be true, it's only for other people. And then you meet and listen to, you met Niels last week, you met Michael, or not last week, yesterday, you met Michael on the first day, you're going to meet Abdul tomorrow. And, you're getting to see real people, real stories. And my philosophy is, if they can do it, why can't you do it? So, hopefully you can really sort of relate, to Cynthia. And I love her because she's so down to earth. She's she's cosmopolitan. What I mean by that, she's lived all over the world, and also what people sometimes, for those, sometimes, I've got a South connection, whatever, and they say, oh, is this just for South Africans? No, not at all. There's people from all over the world. Cynthia's, lives in Italy, basically, and from America, as an example. Okay. And the other thing I like about her is it's about getting results, So, she was getting a passive income within, I think, about 2 months, which is, it's aggressive, it's fast. But, that deal I showed you on the platform right now, that industrial deal with DWG, if you invest before the end of the month, which is, I know it's tomorrow, but the point is, if you invest before the end of the month, that they actually pay monthly. And so you'll get your first dividends in March. So, I had someone a couple of weeks ago say to me, yeah, but Scott, I've been on all these courses before and, I don't really get results and whatever. And, how do I know I'm going to get diversified passive income? I said, well, that's what we do. We're here to get results, get the income. If you invest in this deal, you're going to be earning an income in the next 1 to 2 months. Like, if you're not earning an income after 12 months, that's your fault. It's because you've done nothing. Okay, so let me share my screen with you quickly. Okay, so just some people sort of say to me, how does this all fit together? In simple terms, we call it our aspirational mastery levels. So we've spoken a lot about mastery and how to kind of, you don't want to be a dabbler, you don't want to be a stressor, you want to go to mastery. So you got Wealth Going Global, that's the foundation. It's all about the right information. Then you got asset mastery. That's all about the right partners. And if you want to bring it all together and you want to work with me and Callio and Alex and the team from a coaching perspective and basically have your own family office, then it's the mastermind in terms of the process. So, our philosophy is, if you want to go up the aspirational ladder, that's exactly how it looks in terms of the process. So hopefully that makes it easy, safe, simple, for you to understand. Take a screenshot if you want in terms of that process. How do you apply for the mastermind? You literally go to diversificationmastermind.com. It's not for everybody, but the point being is that we meet with you. It takes about 30 minutes, and either Alex or myself meet with you. We just want to understand where you're at, what are your challenges, what are you looking to achieve, and make sure that there's a mutual fit with regards to the mastermind, because our job is to make sure that you're getting the right type of people. Mainly, it's not how much money you've got. It's, are they like-minded? Do they, are they clear on what they want, etc. So we go through that with them. They also have an opportunity to ask any questions they've got around the mastermind. And if there's synergy and a mutual fit, then, they're invited to be part of the mastermind in terms of that process. So that's the link. You literally go to diversificationmastermind.com. If it's too complicated for you to do that, type in the mastermind into the chat box, and one of us will follow up with you and, send you the link, etc. So you literally just go in the chat box and type mastermind if you can't make that work, and we'll share the links afterwards. Okay. So I now want to share my second interview of the evening and of day 4. And this is, equally as powerful as Cynthia. And this gentleman, Selwyn, Blyden, he's basically, if you look here, I mean, I'm going to go through this in the interview, so I'm not going to repeat myself, but he's basically got a PhD, CFA, and I mean, he's basically got a PhD from Cambridge. He's going to be talking, I mean, he's basically be doing property funds, real estate, alternative assets, private equity, for the last 20 plus years. His partner, Glenn, is also a CA. I mean, you know, my question to you, when you're doing deals, and we did a deal with these guys, we closed in, you know, Manhattan, was the last deal we did with them at the end of last year. We've got the German deal with them. And my point being is that, do you want to be doing your due diligence yourself, or do you want to be working with partners like this? But anyway, let's stop talking about it. Let's go and meet Selwyn, and he's going to share with you in this interview how they find the right partners, how they do the due diligence, and how they protect investors' money, remembering that they literally are dealing with family office clients, some of the wealthiest clients from around the world. And, you know, ultimately it's about getting the right partners and making the right decisions. Enjoy it. Selwyn, it's awesome to have you. Thanks so much for joining us. Sorry. It's wonderful to have you online. And just before we get started with you, I wanted to share with people a little glimpse into kind of you guys' background. So firstly, in terms of Callio Private Equity, you know, I just love this, the front of your website, where it's literally communities are more powerful than networks. We're going to talk a lot about this today because, you know, I always say the number one way to manage risk is the right information and the right partners. And how do you do that? Well, it's about getting access to the right networks, basically, you know what I mean? And what you guys do is take it to the next level, which is community. And it's really what we're doing. I mean, on this thing, this diversification challenge is a community of people. At Callio Private Equity, we aim to build and grow community through our investment and advisory activities. We bring it together like-minded individuals and companies that exchange resources and advance ideas, deepening the solidifying relationship of trust. And if I go to team, just to give a little bit of an introduction to Selwyn. So there's two partners, Glenn and Selwyn. So Selwyn has over 20 years of experience consulting and banking locally and abroad. He began his career at McKinsey & Co. in Johannesburg, undertaking projects across Africa. He subsequently co-founded and managed RMB's opportunity in real estate in the global real estate portfolio, and later co-founded the RMB Westport Real Estate Development Fund, the largest sub-Saharan and real estate private equity fund at the time. Prior to joining Callio Private Equity, Selwyn led ABSA's commercial property finance business in Africa as a principal for the ABSA Group. He currently serves on the board of trustees of the African Leadership Academy. And if you don't see it here, he has a PhD, which is a doctorate in mathematics from Cambridge University, which is pretty impressive. So without further ado, Selwyn.
You sound a little bit like my mom, but I appreciate that.
Well, you know, someone has to tell people you came from Cambridge. You know, when we're talking about risk and due diligence, I want people to at least kind of have a bit of a sense of who they're talking to, if that makes sense, you know, in terms of it.
Thanks.
So let's get started. And before we go any further, just tell us. I mean, I've read your bio. No one ever likes to brag, so I do it for you. But tell us just a little bit about your journey. I mean, really, you can see you've got a very extensive journey in property, in real estate, in funds, in private equity, etc. Just talk a little bit about it. How did you get into it? And, you know, just so people have an idea of who's in the room.
So Scott, I mean, you've read out my bio. I started as an academic and realized that wasn't really an expression of myself. I didn't want to be in research, and I didn't want to be stuck in an institution. And the best way for me to get diverse experience in commerce was through consulting. And when I joined McKinsey in Johannesburg, it was the fastest growing office in the world, McKinsey's fastest growing office in the world. And we had very diverse clients and very diverse projects in operations, strategy, organization, capital planning, and so on. After being there for a few years, McKinsey has gone through phases, as people on this call would know. I joined RMB, and that was actually life-defining for me, joining RMB. My current partner, Glenn Scorgi, was one of the first people that I worked with when I joined RMB. And in your point earlier, I'm actually glad I joined a little early and was able to listen to what you said.
I'll just share here, just so people could see. This is Glenn, who Selwyn's referring to. So
yeah. So Glenn and I started to work together in 2004, I think it was, when we first traveled together. We were looking for opportunities. We had a relatively open mandate. The banking world was very different in those days, much less regulated and constrained than it became after the global financial crisis. And what I loved about the banking world is something that I've retained in private equity, and that I think speaks to your audience, Scott, speaks to the people who are here. And that is the sense that your risk is the risk that you see. Consulting is always 1 degree removed. You're telling people what to do, you're giving advice, and then you walk away. You leave your PowerPoint presentation on the desk, and you get back into your fancy car and drive away, and then go to the next client. With and particularly the R&B culture as it was in those days, you are very well aligned with the bank as your principal investor. And Glenn and I ran a principal investing business, and then later on went into funds and into property and into various other areas inside the bank, but always having that particular philosophy. So I think the journey for me is having found that world where you're very well aligned with the people that you work with the people who supply you with resources, with capital in particular. I always wanted to stay in that. And obviously I moved in banking and developed expertise in property, but I've always liked the idea of being a generalist. And Glenn had developed a relationship with Garth, who you mentioned in your presentation as well, Scott. They were kind of social friends, and and Garth wanted to build the capability in Callio for Callio to do private equity in a I think a different way. Just to dwell on that for a moment, private equity investments are often presented as investments into funds, and the traditional private equity managers, the famous private equity managers that are out there, Apollo, Cerberus, Blackstone, and so on, those managers manage giant funds. Glenn and I had both been investors in funds on behalf of R&B and had managed funds on behalf of R&B, and we didn't feel that fully captured the idea of alignment that we wanted with our investors, the idea of a fund. And what we do in Callio Private Equity is direct private equity. That's our core business, it's direct private equity, which is individual transactions or individual investments matched to groups of investors for that investment. So, for example, investors who don't like a particular sector or who want to be more offshore or whatever it is, we can offer them investments that make more sense for their portfolio, for their levels of interest. The other thing that we realized would be very powerful is what you mentioned, Scott, which is the community side. Callio has a family office and a wealth management business. It has clients who, many of whom have been in business or are in business and have networks and links of their own. We don't really like the idea of networking in the sense of, attending cocktail parties and doing that kind of thing.
Just by the way, that's the biggest load of bullshit I've ever heard, where you walk around and hand out your business card.
Yeah, hand out your business card.
It's literally like poor man thinking. Like, it doesn't work. Trust me.
It doesn't work. It doesn't. So the deepest due diligence that you can do on your partner is just knowing them, or knowing somebody who's been in business with them and seen them operate under different kinds of circumstances, and somebody who can vouch for their integrity. So many of the people that we invest in are people that are part of the broader Callio community or our own personal networks, in the sense of we know people who've worked with them, or we know people who've invested with them, and many of our opportunities come through that kind of channel. And I think that's very powerful.
By the way, sorry for butting in. I know people hate me doing it, but I'm just trying to give context to people. Remember to everyone who's listening, remember what I just said literally half an hour ago. What he's talking about is you test people's character not when it's working, it's when it's not working. And that's the power of knowing a relationship, because everyone tells you about all their wins, but they often don't tell you about their losses.
Yes. So, and for me, the best example is actually my own business, Callio Private Equity. So why is it that after working with Glenn in the early 2000s, mid 2000s, we went our separate ways just because of the way things evolved in R&B and the property businesses and so on, and then we joined together. Glenn and I lived through the global financial crisis together, and we were very, very heavily exposed in our portfolio to that. We managed a portfolio with assets of over $250 million, but it was exposed to the property sector, so it was the most heavily hit sector during that global financial crisis. But I could see how Glenn worked. I could see how I worked under those circumstances, and you can build a rapport, and you can now build that level of trust, which is so fundamental. And if I look at the investee CEOs that we work with, not all of them have the same level of capability, or to be completely blunt, the same level of integrity or alignment with us. But the point is that we try to find people who will have that alignment. And in situations where they're facing adversity, will do the right thing. And at least we'll think through the process with us aligned with them. So to give you an example, and I think Scott in various other presentations, I think Glenn might have presented to a different audience, but Awesome Business Finance, which trades as backed in Texas. Glenn and I were visiting that business last week. The CEO, through COVID period, said he would never stop paying interest to our investors. So we actually offered to him and said, we're pretty sure your business needs liquidity in a time like this. So we're happy to approach our investors and say, you're not going to be getting your interest payments. We felt that might be the right thing for the business. And he said, no, he didn't want to do that. He felt the correct thing was to maintain a 100% track record with us and with our investors, even if that meant making a personal sacrifice on his side. And he was able to trade through, and the business has grown and actually grew through the COVID period. Other competitors went out of business, had to be resuscitated or bailed out, but he was able to do this. And I think he took a risk, but the point was that he wanted to ensure both that he was aligned and that he communicated to us that he had that alignment with us. So I think, Scott, your various comments very pertinent. In our deal making, we try not to be the majority. We want to make sure that management and the people who are going to be required to deliver on the investment thesis.
I'm being rude, but I'm just coming back to this, like what I call old school mentality, new school mentality, because old school is, and by the way, Glenn did an incredible presentation last week to our mastermind, was about private equity, and I'll show you some of the slides. Again, people have access to get asset mastery should they want. But the point being is that the old school way of doing it in business or in property was to go and buy the whole thing, okay? And the first time I ever learned about this, ladies and gentlemen, was actually my father. So my father was the financial director of Rainbow Chickens, and he said that Rembrandt, that's one of the most wealthy families in the world, came in and bought 40% of the company. And now the old school mindset is, no, but I must own more than 50%. I must be in control of the company. And then a couple of years later, my friend works in England for a company called Strand, and they're a private equity firm, funny enough, as well. And they got bought out by a big family, and this family, the Hanson family, bought them for 40%. I thought, shit, there's a pattern there. The wealthiest families in the world are buying 40%. Why are they not buying 51%? Because we're all taught to go buy the whole thing and we must control it and whatever. And the point being is that that's an old school way of doing it, because if you control it, you have to manage it. And then, interestingly enough, literally last week, Glenn said, no, we're into conscious capital, and we'd much rather the founders and the owners and the team and, whatever, have the majority, because then they're going to get out of bed every morning and worry about it and getting it done versus you getting out of bed every morning and worrying about it. So I'm like, sorry, I'm jumping in, Solomon, but I'm just trying to give context to my little picture that I drew here. Basically where you're going,
Yeah, that's exactly it. And then the other component is often leaving space for other key employees. So yes, the founder, manager, it's often also other people who are needed to be aligned and who need to have the same kind of orientation. So we're very keen, like in our contracting, we're very keen being on the remuneration committees of the companies that we invest in, both to avoid the conflict that you have with the CEO founders, but also to manage that next level, to say, who else is important here? Are they correctly incentivized? Are they locked in? Is there the correct protection for the company and the correct alignment for that employee? So to try to understand how value is being delivered, and knowing that as an investor, you are bringing a particular kind of value. You're bringing risk capital, but you're not bringing operational capabilities. You're not bringing market knowledge or anything like that necessarily directly. You sometimes can help. And I think we do help our investees. And we often intervene when they want us to intervene. And they'll say, can you help us with this? Can you talk to the bank for us? Can you sit on this call? We've got this issue with one of the other shareholders. Can you help us? we're always available to our investees to do those kinds of things and to investee CEOs and founders. But we're fully aware we're not able to do what a CEO does day in and day out. We're not able to do what a management team does day in and day out. And we're deliberately if we could run, one of our investees, we would, rather than our current job. But we actually believe that our founders should be the best at running their own businesses, both because they should be fully aligned, but also they should be developing their knowledge as they go, as they operate, and they should have entered with a particular understanding of their business, which obviously we test. Yeah. So yeah, to go back to your original question about personal journey, I think for somebody like me who feels that they're a generalist, wants to be involved in quite a few things, likes the interactions, which are, I think, meaningful interactions with partners. This is a very good job that I have. And I'm able to speak to CEOs about something that's very fundamental to them. In many cases, I'm able to help them, and our role in their lives is actually quite fundamental. And we do have investees who are very thankful for the way we've approached things. And we've actually had people seek us out saying, I know I can get the money somewhere else. I could probably get a better deal somewhere else, but I'd actually rather have somebody who wants to relate to me when things are not going well, will understand that or help me intervene in a positive sense. So that's the conscious capital side, in terms of not just in terms of the final end goal investment, but also in terms of how we operate those investments and how we make those investments on day one.
Yeah. So let's go. I want to share my screen here quickly, and we're not going to regurgitate everything that Glenn went through. So Glenn did this session for our mastermind, and like I said to you, every month we go deep into one asset class. And Glenn, actually, funny enough, literally this month of October, did the private equity one. So again, you can get this as part of asset mastery. But what I just wanted to talk about a little bit was just the asset class of private equity, because some people confuse it in terms of what is it, etc. And in simple terms, it sometimes gets confused, but private equity is where you invest in a company, but it's a non-listed company, so it's a private company, and it can also be a property deal. Like, we're going to talk through some real opportunities now, so people can get a sense of it. But just from your perspective, Selwyn, how would you sum up private equity?
Yeah, I think you've already summed it up. So it's a massive asset class. Normally when they show private equity or the size of private equity, they're only talking about those things that show up in formal funds. But if you think about it, almost every business, any business that is not listed, is a private equity business, in the sense of operating outside the public listed markets. So it's a very wide range of potential investees. And it's our area in private equity is a little bit above venture capital, but certainly below what we would normally classify as buyouts or mergers and acquisitions. We invest in what we call growth. So it's the supply of capital to businesses that want to grow and for whom the best form of capital is equity capital and long-term permanent capital in some other form, potentially permanent debt even. So that's how I would classify our version of private equity.
Brilliant. And I think, again, I'm not going to go through all these slides, but going through this whole presentation, there was like, what are the different returns? How do you balance risk and return? There was talking about private equity in 2022 and where the opportunities were. Just talking about the Callio private equity team and taking it to extend more around what Selwyn has already spoken about and what differentiates them. But what I wanted to do was actually to pivot, and I want to start talking about some using a deal as an example to kind of talk about kind of risk and partners, because I kind of want to get in. So as an example, this is an opportunity that is literally becoming available as we speak. It's one of the ones that you've done a lot of due diligence on, but let's not use this as an example, as a case study for kind of the type of, thinking that you would go through in terms of risk and due diligence. So let's just say now, I want to be in American property. I personally have been wanting to be in it since 2010. I've been wanting to get into Manhattan for my whole time, and I've never once been able to invest in New York, let alone Manhattan, because it just never found a way to be able to do it, never found a partner on the ground. And so talk us through, Selwyn, the process you and Glenn go through in ascertaining a market, finding the partner, doing the DD on a deal, and determining, yep, this one's good for our investors.
So this is actually a fantastic example, Scott. So one of the sponsors of the underlying transaction for this Catherine Street transaction in Manhattan is somebody called Duncan Randall. Duncan and I have known each other. We were for over 20 years. We were together in McKinsey, and we served on the same team and landed up living in the same house for several months, serving a particular client. Duncan is married to an American. He's lived in America for several years now, and he's built a property business using his own money and money from other investors. He had previously been a private equity operator in South Africa. He was one of the founders of Tana Africa, which is funded by the Oppenheimer family and a sovereign wealth fund from Singapore. So here is somebody that we know very well. Duncan knows that we have an investor base that is interested in these kinds of assets. He has shown me personally transactions. Before I joined Callio Capital, I invested with him myself. So I have a sense of how he's operated. I know how he's operated through difficult times like the COVID period and how he's been able to manage assets. He actually approached us and said, this is what's going to come available. I want to structure a deal which will allow your investors to invest into this debt. There are other people in his network that he's offering this to, and so we had we had a chance to review his due diligence, look at the documentation ourselves, ask various questions, understand the market studies, and so on. But the starting point was this was not something we sought out. We did not do a web search and say, well, deals available in Manhattan.
And by the way, if you do that, just quickly, sorry, if you do that, like you're buying the crap no one else in America wants. By the time it's on the web, no one else
exactly
wants
it. Yeah, so this is very much a private deal based on relationships that we have and that other people would simply not have access to. So I think this is one of those examples. Every single one of the deals that we have was sourced or has been sourced through somebody coming to us and saying, do you want to participate? Does this interest you? Is this something that your investor base is likely to go for? And then we can interrogate it and say yes or no. In this case, what was brought to us was a very much established transaction. A lot of the initial property work had been done to a very high standard. Duncan himself works with a team that has a lot of experience in this particular kind of property redevelopment. Historic buildings in Manhattan that are being redeveloped. There's a system where you get historic credits which allow you to benefit, to effectively do your developments at a cheaper rate because you're getting these tax credits. And so a lot of the work had already been done. It was a question of reviewing that and understanding that and getting a sense of the risk return. We already had a strong sense of the sponsor and the way that they would approach this. So yeah, so this particular transaction, what's been offered is senior debt secured by a long-term lease on a property that was formerly owned by the Catholic Church. It's in the process of being transferred from the Catholic Church to the development company. And the funding is senior funding, as I said. It's secured funding. It's 1% a month payable quarterly. So very good return. We've again, to Scott's principles, we've said we will only take a relatively small portion of it. We're probably going to take somewhere between 15 and 20% of the total debt that's available so that other people can put their money in. There's a big group of investors, many of whom have invested before. with Duncan and with the other sponsors in his team. And so that offers us a sense of comfort. Other people are reviewing the documentation. Other people have experience on this, and there's I think strong alignment with the total investment team.
A couple of things that I think are first you're saying. So firstly, there's power of community. Okay, so like it's not like me trying to do it all on my own. Like, oh my God, I'm going to do all my own due diligence, whatever. It's like there's a whole group of us, you know, like looking at it and whatever, doing it. The second thing is that from a risk perspective, you're effectively taking out the bank. Like you're almost taking the position of the bank because you're putting the first mortgage debt down. So you're behaving like a bank. You're putting the money down. You've got first mortgage debt over the property. So should stuff go wrong, the property's there. It's exactly like when a bank lends you money against your house. And for the bank interest rate, you're getting paid 1% a month, paid quarterly, which basically means you're getting 12% a year in US dollars. Now, please tell me, and again, I've been doing this 28 years, 12% in Manhattan, New York, okay, for a 12-month project, it can be extended to 18 months, but it's still a short-term project, 12 to 18 months. If it gets extended to 18 months, by the way, you still get paid your 1% per month. So you're still getting 12% a year. I mean, that is a really, really good return. Now, you're not getting the capital growth. Remember, you're not playing in this part anymore, but that because you're taking away the risk. So this is an income-producing deal only, but it's a 12% in Manhattan, New York, and you basically have it secured against the property with a partner that's got extensive experience, So I just want to kind of give people a context of what we talk. And these are real life examples now. Like I didn't want to, someone phoned me yesterday and we had a chat and we were like, you know, we can talk about private equity until the cows come home, or we can talk about actual deals, like, because then it's like literally people can learn from actual deals, you know? So that was the one. Now we're talking diversification. And so I tell you what, one was getting a little time machine and an airplane all at the same time. And we're just going to fly across the world, straight over to another continent, another currency, another partner, another asset class, by the way, because that one is effectively a debt deal. Yes, it's in property, but it's a debt deal in property. And now we're going to fly across the world to Germany, which, by the way, is the #1 economy in Europe. And we're going to look at a euro deal, and it's actually an equity deal in terms of that process. So if I come here, so let's do the same process now with this deal. Because I'm trying to give people a concept of from the comfort of their couch, they can get access to partners, they can get access to information, they can invest, and they don't have to get on an airplane.
Yes, they don't have to get on an airplane, and they don't have to visit small towns in Germany. So just to give some context on Germany and why the opportunity is a genuine diversifier, Scott, because you know, United States, Manhattan, that is the center of the universe, at least according to New Yorkers, that, you know, and a lot of people, that would be the center of the universe. In Germany, a big chunk of the economy is run out of towns that you and I are unlikely to visit or be able to find on the map necessarily without some kind of help. So I mean, the examples are Volkswagen's based in a town called Wolfsburg. This particular town, Wuppertal, is home to a couple of industrial brands like Vorwerk and suppliers into the motor industry. It's not far from Düsseldorf, but it is a secondary town, but with a very strong industrial base. So just to give a sense, this kind of opportunity is fundamentally different and is a genuine diversifier. And in Callio, this would be the third deal that we've done with the same sponsor. The sponsor, interestingly, was also introduced indirectly to me through people that I knew, and several people that I know had invested with him previously, and very successfully. It's managed by somebody called Peter Katz. Peter used to run the Redefined portfolio in Europe. And he then went on his own and uses private money and has a very similar mindset to us, which is quite important. He also raises funding, does a kind of an equity raise for each individual investment. And he wants to do it through people that he trusts and that he knows. So as I said, this is the third one we've done through Callio, but before that, I'd actually been exposed to several of his other transactions. And again, I'm used to his due diligence process. It's very rigorous. It involves technical elements, engineering studies of the buildings, for example, studies of existing leasing documentation, tax structuring, and so on. Those are extremely important in this kind of transaction. What's been offered here, though, and again, to Scott's point, is actually equity. So it is an equity exposure. It does have a reasonable yield. We expect a kind of mid to high single-digit yield initially. It has in-place debt, which is important. It has debt that was entered into and that will be assumed on transfer of the property when interest rates were still low and that were fixed at that time. So there's a massive benefit in that.
But just on that, sorry, Soren. So what's really important here, people always say to me, oh, but Scott, you know, if I buy a house, I'm getting a mortgage, so I'm getting leverage and, you know, et cetera, et cetera. And what you're saying here is so important because you are still getting leverage. The only difference is, even if you got $100 million and you fly to Germany right now, the chances of you getting debt are zero. Because you've got no relationships. And if you do get debt, you're going to get very expensive debt compared to partnering with a local person that's got a track record, got experience, has the debt in place, and like you said, has fixed it prior to the interest rates rising. So it sounds too good to be true. And it is if you're trying to do it on your own, unless you've got partners.
Yes. So these deals that these deals that we're talking about, Scott, are a little bit different from the deals that we normally do as a pure private equity house. Anyone who visits our website will see deals that we've done directly. These deals are deals that have been brought to us by people who are part of our community, and people that we've invested in personally, or who are people that have been invested in by like friends of ours and other members of the Kaleo community. And so these are a little bit different, but these are not possible to do from where we're sitting. And we have to rely on the individual partners and the networks that they've built. So for example, Peter has a whole team of people who do due diligence for him in Germany. He has a legal team that has worked with him on multiple transactions. He has an administrative team that is able to manage the investment structure for him. And those are things that if you and I were trying to build those from scratch or trying to do on our own, we simply would not be able to do without years of work and without having been in the market previously. And the benefit of somebody like Peter is he built up his infrastructure while working for Redefine and building their European portfolio years back. Then going on his own, he decided to focus on particular asset classes. He did a study. He said there's certain kinds of assets that seem to do well through the markets: health assets, diversified assets, basic necessities, properties that deal with basic necessities. And then the German market in particular has certain resilient features to it, including the availability of debt from multiple funders. Again, but Scott's point stands. It's not possible for us to arrive there, drive out to Wuppertal, and to start doing deals. These deals come along quite rarely. This is the first deal we've seen for over a year from Peter. Just hasn't felt that the other deals that he's seen are good enough for his investment, for his investors.
Yeah,
so that's just
to put in perspective, Soren, you know, the last deal you guys did with Peter, and you've done 3, so there's track record, yes. You've already said. But I remember there was a deal as COVID was happening, and one of your investors got spooked, and there was a gap for 700,000 euros. And I was like, pick me, I want to be in it. And we tried to go to our investor base, and like we just couldn't move quick enough, like, you know, because these things move quickly when it's a good deal. And again, I remember it being a DIY store, like
yes.
Anyway, and the long story short was it was a great income return. It had good capital growth. And you guys exited that in, you know, 18 months or something and got a 1.8 multiple, which basically means if you put $100 in, you got $180 back, which is like really good in less than 2 years. And it's, you know, again, like it was for me, it was so frustrating. It was like, I was like, I want to be in the deal, but we just couldn't act fast enough, you know. And one of the reasons we created the mastermind was that sometimes through the Wild Migrate platform, you know, it takes too long to get stuff set up and you know, blah, blah, blah. And sometimes with the mastermind, it's like, guys, it's a good deal. You know, we need to move quickly. Are you in? Are you out? And then sometimes that's how private equity works. You know, it's you've got to be able to you know, act fairly quickly. So when this deal came along and you were like, same operator, same person, I was like, if you don't let us get in this deal, it's gonna be war. You know what I mean? So yeah, so really, really appreciate it. Peter, let's go to the last one. So again, let's go back in our time machine now, back in our airplane, and we're gonna fly right across the world, back to Austin, Texas. And again, we're going to go into a different asset class now. It's still under the umbrella of private equity, but now you're actually investing in a company, and Peter's I keep saying Peter now because you put Peter in my head. Someone's already mentioned this company backed. Just tell us a little bit about this, because I mean these are literally three opportunities that we're looking to go live with you on, in the near future.
Yeah, so Scott, I want to stick with the theme that you raised, this partnership theme. So Backed is the trading name of a company called Awesome Business Finance. Awesome Business Finance is founded by a South African called Zaan Myburg. Zaan is also founder of Cashflow Capital, which is a business here in South Africa, and is a working capital lender, mostly to restaurants, franchisees, and so on. And he moved to America, and we, as in Calio, started financing him pretty much from the beginning, just feeling that he had a good concept, he was a good operator, and he had a model for dealing with a kind of risk managed model for introducing himself into the US market. So we've been invested since 2019, and we invested in equity and permanent debt. And now that's all been taken up, but the business is a lending business. It does what are called merchant cash advances and lines of credit to medium-sized and small corporates in America. That is a massive market. United States is obviously a very dynamic economy. There are hundreds of thousands, maybe millions of businesses that actually fall into scope for Backed. And it's mostly working capital lending of less than 18 months and relatively high interest rates, because it's generally lightly secured or unsecured lending. And what's important is that over the years, we've been able to monitor the credit performance, and we've been able to monitor the management performance. And Glenn and I were there last week, and we sat with the management team. We were able to see Zaan has built a business which now has 56 employees, 46 based in Austin, 10 based in California. He sources deals through brokers and through a direct team. He's got a refined technology system for reviewing deals, assessing the credit risk, and a very small percentage of deals that are referred ever get funded. But there's massive scope in a business like this. Backed was actually rated by Inc. It was rated as one of the top 1,000 fastest growing businesses in the United States, ranked in the top 200 last year. So it's viewed and seen as a successful high growth business. What's been offered is debt, again, at 10% per annum. It's a very different profile, very diversified. That's US dollar debt. That's money that goes into the business as subordinated debt and then is used to finance the operations of the business, mostly lending, mostly directly going into building the book of Awesome Business Finance.
Awesome.
There is a senior lender. And this helps us as well, because it's not just our due diligence. It's Fortress, one of the world's biggest lenders, is the senior lender to Awesome Business Finance. And they have a line of $50 million, expandable to $100 million.
It's amazing. So, and you also, you guys put your money where your mouth is. As I understand it, yes. Debt and your equity, you've got $20 million in the.
Yes, $20 million. We have exposure to it.
So,
and I'm personally invested. Well, personally, it's actually my wife who's personally invested in this business. Glenn is personally invested in this business. So it's we definitely put our money where our mouth is, just generally. But with this opportunity in particular, it's been a very good investment for us. We've been able to see it grow from initiation, and we've built a very strong rapport with the management team. Obviously, like any other business, it has its challenges and it has its risks and so on. But the risk return profile, I think, is massively compelling for a debt instrument. To get 10% per annum and to have an investment term of 3 years. Given where interest rates are likely to go, I think I just think that's very compelling.
Yep, no, completely. Just one thing we forgot to mention here. This building in Germany is, so just to remind everyone, this one is a 12% US dollar income return per year. This one is a 6 to 6.5% euro income return, again paid quarterly, with a total return including capital growth of somewhere between 13 and 15% in terms of that process. And then this is a debt deal at 10% in US dollars. So you've got euros, you've got dollars, you've got debt, you've got equity, just to kind of give you an idea of different types. Selwyn, as always, it's a pleasure to chat. I love what you've done today, just with everyone and sharing with everyone. I'd love anyone to give comments in the chat box as to what you thought. What we've done very consciously today is we've taken away a lot of the theory and we've talked practical about actual partners and actual deals so that people can understand it. Because again, I can waffle about the theory till the cows come home. I've got an entire course on it, Wealth Going Global and Asset Mastery. You can go and do all of the research. But in my opinion, there's nothing more powerful than learning while doing. And what you've helped us do today very consciously is go through 3 deals and hopefully for everyone, literally learn while doing. And even if you're watching in the recording and these deals are gone, because they will be gone. They're going in the next, one of them is closing in a month, the other one in a month, in 2 months. The point is, might be watching the recording, but it still gives you a concept of when deals come, how they work, particularly when we work with Kalia.
Scott, thank you so much. I love the opportunity to speak about my business. I love the opportunity to speak about my deals. And I'm also glad that I joined early to see what you said about partnerships, because that's so fundamental to the way we operate as well.
Yeah, no, well, look, it's I fundamentally believe it's the collaboration and partnerships is the currency of the 21st century, and that is built on trust. And the reason I say that is that, let's say that the currency of the 21st century is trust, but how do you achieve trust? Well, it's collaboration and partnerships. It's the only way. It's the only way to do it. If you try to do it all yourself, it's literally the old school way of doing it, and then you're going to be stuck probably in your country, in your asset class, in your town, in your currency, and because it's virtually impossible to go internationally without collaboration and partnerships and to truly diversify. But there's lots of brilliant comments coming through, Selwyn. Thank you so much for your time.
Thanks,
and have an awesome day, dude.
Bye. Thanks, everyone.
So, what did you think? I saw a bunch of people putting comments in there, and can you see, like, I mean, for me, 2 defining things, and I put comments in about it. Firstly, would you like to have someone like that as part of your team, helping you do your due diligence and the type of deals you're investing in? And can you start to see how you don't need to know everything? You don't need to figure it all out yourself. You don't need to learn about everything in every asset in every country. So, it's really, really important. Like, it's a mindset shift. Like, I was doing it all myself too. Oh, hang on, I can do this through partnership. Like, it opens up the world. So it's hopefully, really, really important. The other thing I found so interesting is take his team and take all their experience and all their resources and all the money they've got behind them. And they were like, we can't go to Germany and do deals. There's no ways we'd be able to do deals like Peter Katz can do in Germany. And I find that fascinating because, again, from all over the world, I meet people like, I don't like partnering with people. I'm going to go do it all myself. And I'm like, good luck with that. So, it's a real mindset shift, for everyone. Okay, I'm conscious of everyone's time. I'm conscious of everyone's energy. So I want to look to sort of wrap up for today. I've got 2 more gifts for you. There's Judd Dunning. Now, Judd Dunning is an amazing gentleman. He's been in the market for 20 plus years. He does industrial. So, by the way, he's actually the guy. I'm going to have to go back to the spreadsheet. Just give me 2 seconds. Where's it gone? Here. He's actually the gentleman behind this deal here. So this is the deal they pay monthly. And it's industrial, buildings in America, triple net leases, 20 years. And I mean, this deal, as an example, has a 20-year lease. The company is behind it, has 500 million in revenue. So it's really, really interesting. But anyway, he's going to talk about how to get into industrial, how to get into logistics, what are the right type of markets in America. He comes from the capital markets background, which, means he speaks in a fairly sophisticated tone. I tend to be a translator, which I try and take his complicated American financial lingo and turn it into English for everyone to understand. But I would highly recommend that you watch these resources. Judd is really, really intelligent. He really knows what he's doing, and he keeps bringing us great deals on the platform. Bruce Saunders is actually an ex-South African. He went to Atlanta in 1997. He's a chartered accountant by background. He went over to do his articles. He's been in property ever since. So 20, what is that? 20 plus years in the market, in the property real estate space. He's probably the guy that I trust more than anyone in America when it comes to property, and particularly when it comes to due diligence. The man is phenomenal. He's very conservative by background. He's a chartered accountant by background. We've done 7 deals with him, 7 different deals with him. All of them made us money. He's always conservative. If he says he's going to make you an 8, he tends to make you an 8.5. I love working with him. And again, fascinating, great guy. And he also talks about, he's based out of Atlanta. Judd's based out of the other side, California. Anyway, so Bruce is in Atlanta. And again, he talks about the markets, and he specifically talks about medical office building and multifamily. So 2 amazing resources. And it's just giving you a taste for the type of partners that we are going to expose you to, both through the mastermind when you do the different asset mastery stuff, but also the investments and the deals, when deals become available to be able to invest. Okay. So the definition of insanity is to do the same thing over and over again, expecting different results. Again, I've said this a couple of times already over the last couple of days, but are you starting to see a whole different way of doing it? Are you starting to have, hopefully, a complete and utter mindset shift that there's a whole different way of doing this? And, I started on day one and I said to you, you can do it all yourself. I tried to do it all myself for 14 years. And then I realized there's a much, much easier, safer, and simple way of doing it by partnering with you've met lots of them now. Gary, you've just met Selwyn, you've got Judd and Bruce to meet, and Wilson, etc. And what's fascinating for me is that the definition of insanity is keep doing the same thing. So you can say, okay, this is all great information, and then keep doing what you've always done. But then you must expect the same results. Or if you want something fundamentally different, then you can do it a different way. And hopefully I've shared with you a different way. Tonight I understand, and today what time zone you're in, I always kind of get this, Scott, you're overwhelming people. It's like drinking from a fire hose. There's so much information between yourself and Cynthia and Selwyn. I get it. And I get the fact that the brains are tired. So I just want to remind you of that challenge. If we had this little game, and a doctor said to you, you got a serious medical condition, you had to lose 10 to 15 kilos as quickly as possible, but you had 2 options. You could do the home study course, or you could get that coach that literally turned up in the morning, knocked on your door and said, right, it's time to go train. Which one would give you more confidence to getting the results? And I remind you, it's 2024. It's time for you to get results. Stop the definition of insanity and keep thinking, oh, it might get better, or maybe I'll do it differently. Maybe if I'll get different results. Do it differently. You need to build your wealth plan. You need to have globally diversified passive income. You need wealth protection. You need a plan B. You need peace of mind. You want to ultimately have the freedom. So do something differently. And hopefully we've shared with you a couple of ways to be able to do it. If you want to do wealth going global, you've got the countries. How do you find the right countries? How do you find the right currencies? What are the top 15 assets? How do you find the right partners? How do you, build a wealth plan over time? If you want to go to asset mastery, you've got all the different assets where you'll meet all the different partners. And again, I've literally had people come, yeah, but I know all the information. Wonderful. You know about industrial logistics in South Africa or Australia. Well, what about meeting a partner that does it in America? What about meeting Gary that knows how to do it, London residential institutional? So even if you know the theory, this is not about the theory. This is about the partners, and it's about practical opportunities that you can learn about the actual opportunity and actually investing in the opportunity. So it's all about the right information and the right partners. And, we literally had 2 choices. We could make it super, the mastermind specifically, you make it super, expensive. And I've been part of masterminds that cost $50,000, so this is what masterminds cost in terms of that process. But we're not charging $50,000 because we want people to have money to be able to invest in deals and get results. $25,000 is pretty much the going rate in most countries now, to be part of a mastermind. But we're not charging that because we want people to be able to invest and have money to invest in deals. $10,000, we should be at least charging $10,000. We're not even charging that because we want people to be able to invest in deals and be able to get passive income and results. However, I would ask you, I'm not going to charge you $10,000, but if I was going to charge you $10,000, would it be worth $10,000 to you, if I could help you achieve your freedom goal, would it be worth it to you? Think about that. What about if I could provide you with peace of mind for you and your family and make sure that your future was secure? Would that be worth $10,000 to you? What about if I could provide you with a way to protect your wealth that you've already created? Would that be worth $10,000 to you? And what about if you could save a decade of time? Would that be worth $10,000 to you? And finally, what about if I did all this and provide you with globally diversified passive income and thus peace of mind? Would that be worth $10,000 to you? Interesting perspective, isn't it? So I remind you of Michael Anisett. He was concerned. He wasn't sure. It sounded too good to be true, but he took that leap of faith. He got involved. And, he literally says, when I joined, it was the best money I ever spent. And ultimately, I would have never happened if I tried to do it myself. And what's so interesting from his story is that, he negotiated with me with regards to the buyer's trip all those years ago. And he ended up becoming a great friend and, a really big investor in many of the deals. But on top of that, he achieved his objective, 10 years later and his outcomes. And it kept reminding me and Alex and Shane and the team, it's not about having a high front end number. In fact, it's about trying to get the front end number as low as possible and ultimately helping people get results, because then you're aligned long term. The challenge we've got, we can only offer the mastermind to 5 people. So it's a barrier to entry we have. It's not ours. It's because it's a manual process. You work one-to-one with me. You work one-to-one with with a team like Alex, and you work one-to-one with Calio. It's not scalable. It's bespoke. It's literally for yourself, from a holistic perspective. It's about you and your family, and therefore it's not scalable. So it is a challenge that we have. If you are interested, literally go to diversificationmastermind.com. You're going to get to work and learn, from people like Anthony, from Garth, from Selwyn, and obviously myself and the team with Alex. Okay, so you can go read all about the different testimonials and videos and everything else if you're interested with regards to that. But hopefully you've met enough people over the last week. And by the way, you got one more tomorrow with Abdul, who is an amazing man. And if you think you're too young or too old to get started, he's 71 or 72, and he joined the mastermind, and he's going to talk about his experience. Highly sophisticated, chartered accountant, actually audited the Auditor General. So yeah, it just gives you an idea. So that's the difference of having the coach turning up at your door, and ultimately that's your comfort zone. And we intend to make magic for you by getting you out of your comfort zone. That's the mastermind. That's how it happens. And that's, my strong invitation to get you out of your comfort zone, to do something different, and to get your results. Whoa. Sorry. In terms of your action steps for today, silver, identify one specific risk in your current investments and outline how diversification might mitigate it. Name 3 things you can do right now to find the right partners and the right information. Consider wealth going global or the mastermind. And finally, share one key takeaway on social media. And again, I've said this so many times over, that's not only adding value to others, but it's going to entrench it and add the most value to you. Gold, watch Judd Dunning and watch Bruce Sanders, and they're both in the resources section. So you might not have time tonight, you might be tired or whatever time zone you're in, but I would watch them as soon as you can, because you're going to get to learn. I mean, you've come here and we've tried to provide a huge amount of value to you, literally for free. But we want you to learn from these partners. We want you to experience them so that you can have this fundamental mindset shift that you need. That's the formula, ladies and gentlemen. Hopefully today we've covered partners, and you can start to see how, if you don't know how to get partners, by partnering with us, you can get access to partners. But either way, I've shared with you how to get partners. If you want to go fast, go alone. If you want to go far, go together. It's an African proverb. I absolutely love it. And it truly sums up what we're doing not only with the Wealth Migrate platform, but also with the mastermind and the accessibility we've got to the right information and the right partners. For those of you in the VIP, it's time to go to the Q&A room. I'm really, it's my favorite part, as I said lots of times before. If you want to upgrade, go for it. There's a link there, and you can still come and enjoy the last 2 sessions, and then you'll get the recordings to all the other sessions as well. Join the WhatsApp group, join the Facebook group, make sure you do homework, collaborate in the Facebook group. And I want to kind of finish and remind you, the 2 most important things are the right information and the right partners. The plan for tomorrow is to put it all into practice. You've now had 3 days of getting the right information. You've had today of getting the right partners. Now it's all about putting it into practice, building a wealth plan. And so that's what tomorrow is all about. Plus, you're going to meet Abdul. Trust me, you want to bring it all together. If you've come this far, the dabblers are gone. The stressors have stressed themselves beyond belief. But if you've come this far, make sure you finish strong tomorrow. Take the theory and turn it into practice. And I promise that my intention tomorrow will be to take that hope, to give you a plan, and literally you'll now know that it is possible. You'll have the belief, but more importantly, you'll have a plan and you'll have a way to get results. Money won't create success. The freedom to make it will. The prize winner for today, Sharita Trott. So well done, Sharita. Wonderful for your engagement. Really appreciate it. I look forward to seeing you in the VIP room and you benefiting from all the benefits of being part of the VIP room. And, make sure that if you're not part of the VIP yet, do your homework. We've got 1 more prize winner tomorrow to join the VIP room. And if you want to sign up, you can still sign up. Thank you very much, ladies and gentlemen. That is all from me. I know today is a longer session. I apologize for that. Day 1, day 2, and day 3 was all about the information. Day 4 is all about the partners. It is a longer session today, but there's so much value I wanted to share. I mean, we could sit here for another 2 hours listening to Judd, listening to Bruce. The caliber of the partners is going to determine your success. Let me say that again. The caliber of the partners is going to determine your success. You can either try and do it all yourself, or you can find a way to find the right information, find the right partners, and get the results you want. On that basis, good night and see you tomorrow. Cheers.